Everybody, all 12 of you. How we doing today? Nice to see you guys in here. Hope you're doing well. Can everybody hear me okay? I'm having one of those soapbox moments this morning, guys. Forgive me. And I started with the picture of the Formula One car. And if you've ever watched it on TV, guys, they scream. They're the most amazing vehicles in the world. The most amazing feats of modern technology. It's unbelievable. But if they threw us the keys, not like there's keys, but you'd never think that you would just be able to jump into one and set a lap record, right? You would never think that you'd be able to jump into one and keep up with the leaders. You know that you'd have to learn to use it, to trust it, to take advantage of all it had to offer before you could really be efficient with it. Guys, this is the case with your software. You guys have the Formula One version of the software. You guys have the best of the best. There's no doubt in my mind, and I'll stick to my guns on that 1,000 times over. But you've got to learn to use it. Give yourself a little bit of grace as you go through, becoming familiar, learning how to take advantage of all that it offers. And it'll just make your life a little easier, guys. Expectations are key. Good morning, Joel, Haji, Chef, Chris, Debbie, and JW. I think very often we create very unrealistic expectations for ourselves regarding the use of the software. Well, I've got software. I should be profitable this week. I bought software. It should just tell me. There should be no question. There should be no learning curve. Good morning, Luciano. And guys, that's not the case. You've got to learn to use it. You've got the most high-tech hammer in your hand. Let's learn to build a house with it together. Let's learn how to use it efficiently. And then you can use it the way you see fit. You can create your own artistry with it. And then on that same tone, I'm going to remind you of something, guys. You're not in charge. Good morning, Kath. You're not in charge. You're not in charge of the movement of the market. You're not in charge of what areas hold and break. You're not in charge of whether you win or lose. The only thing that you will ever be in charge of is whether or not your rules are met, whether or not you're giving yourself the best chance of success. Remember that, because we all try to bend the market to our will. We all try to make the market go where our opinions are telling us that it wants to go. But guys, you're not in charge. The large crowd's in charge. They have deeper pockets than you. They have nastier dispositions than you. They can move the market. What we're going to do is we're going to let them. We're going to step aside and we're going to let these sharks, these big money investors, do what they do, because they don't even know we exist. They don't care that we exist. They don't care that we went long and they want the market to go down. It doesn't matter. So we're going to let them do what they do. We're going to let the people in charge move the market, get it in and scream it in one direction. And then we're going to be a remora. We're going to hop in and we're going to take our little piece of the pie. We're going to thank them very much. Then we're going to get out and we're going to wait till they create advantages again, guys. So this is what the classroom is designed around, is learning to use the software. Good morning, Jose. It's not designed to make you brilliant on day one, but it is designed to give you a solid foundation so that you can go off and do the things that you want to do with it. And it all revolves around advantages. So there's my soapbox this morning. 2 things that you have to do as a brand new user. 1, just let go. You're not in charge. It's okay. We're going to take patterns that repeat themselves and create an advantage. And then 2, just give yourself a little time. You're going to learn it. I'm going to make sure you do. We're going to work together every day to get you to where you want to be. But it's going to take a second. So advantages make the world go round. Rules are based around advantages. Patterns are based around advantages. And guys, knowing when news is breaking, that's a huge advantage. Today is December 14th, Thursday. And at 8:30 a.m., there was a lot of red boxes, a lot of high impact news. And it made the market spike a little bit, not too much. But it moved fast enough, it was hard to read. I had to wait for it to settle down. If you watched FOMC yesterday, it was crazy all afternoon. It was, it looked like it slowed down, but the inability to follow patterns stayed true for almost an hour and a half after that news release. So knowing when the high impact news is, guys, gives you the advantage of not jumping into a freight train of emotion, lets the people that are moving the market react to the news. What you'll find is that we don't react to the news. We don't make decisions based on what they say. What we do is we just kind of sidestep out of the arena while the people who do make the market do crazy things. So knowing when news is every day, guys, creates a huge advantage for you. And then knowing where to find what you're looking for creates a huge advantage as well. Each and every item that I talk about comes from the tutorial section, right from the education page. And if you open up that link, it takes you all of the rules. It gives you a plan. It keeps you focused on the best of the best. And the best of the best, guys, is what we call a high probability trend trade. This is the beginning of your trading journey, because this is a trade that when you follow the rules typically wins 70 to 80% of the time. This is a trade that when you depart from your opinions and you focus on the pragmatic, just pattern reading, it typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. Good morning, Jim. This is a trade where each indicator on every chart agrees for the trade. Guys, that should give you warm fuzzies when everything says your trade is more likely to win than lose. This is also a trade that teaches you how to be a chart reader. It teaches you how to sit on your hands and dissect the information, take it, and then make the decision on whether or not the information being given fits your rules, guys. Chart reading is 90% of what we do every day. Chart reading is making us professional waiters rather than traders. Chart reading is going to allow you to understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And these three things are going to work together, and you'll be able to use them to get into trades at that likely to continue spot, because that's where the trend is most likely to continue. You're going to have a solid set of rules to get you into the market at that point. Eventually, as you learn to trust, you will understand where the market is likely to go, and it will allow you to hold for bigger moves. It'll allow you to make more profits. It'll keep you in trades longer because you will trust what the indicators say, and you'll learn to tune out what your gut or your opinion is telling you. And then finally, you're going to understand where the market is likely to stop. And guys, this is probably the most talked about concept for new users. This is the most broken rule for new users, because areas where the market is likely to stop, no matter how much you wish it would continue, these are areas that can stop the market, create a giant bounce, reverse it. We call these likely to stop areas termination conditions, guys. And a termination condition does just that. It can terminate the trend. It takes away your advantage. Termination conditions not only stop the market cold and create a bounce, but what they really do is they create an anchor for the highest probability trend trade that you could possibly take. Guys, I'm going to apologize in advance. I'm sucking wind a little bit today. My allergies have kicked in full tilt. So if you hear me gasp for air, I apologize. The high probability trend trade that we're going to talk about, when it happens after a termination condition, after one of those likely to stop areas, that is the highest probability trend trade that you can take, guys. That is the best of the best. That's the one that's going to give you an awful lot of confidence in your patterns. That's the one that's going to produce the highest win percentage. That's the one that we're going to focus on for the first hour of class, guys. This is just a 101 class. It's a remedial class. It's giving you a foundation class. And then from that high probability trend trade, from your ability to read charts, you're going to create a plan that works for you. So I'm going to encourage, I don't give trading advice. I certainly don't tell you what to do or how to live your life. But I am going to shout out to the universe, and if you guys want to listen in, that's cool. Keep it simple, guys. Focus on the best of the best. Learn to do one thing really well. And then when you're good at that one thing, feel compelled to add another, rather than trying to do it all straight out of the gates, trying to catch every trade, trying to catch every move. In a 10-hour block, guys, you should only be pulling the trigger maybe an hour, accumulative. And most of us don't sit for 10 hours. We sit for 5, maybe. So 30 minutes of your day is probably going to be spent in the markets. 4.5 hours of your day is going to be spent watching the markets, waiting for those advantages, because you know that those advantages give you the best chance of success. So We're going to talk about this high probability trend trade, guys, and we're going to keep it as simple as we can. It's only 3 rules. It's not 3 rules with addendums. It's not 3 rules with little side notes scribbled on the side of your paper. It's 3 rules. And each rule creates an advantage. And each advantage pieced together gives you a trade. The advantages are in yellow here. So rule number 1 will provide you with the advantage of momentum. Rule number 2 provides you with a clear path, nothing between you and your target, no termination conditions. And then rule number 3 is going to pinpoint right where that market is most likely to continue, guys. And these 3 rules, we're going to talk about them. We're going to associate words with looks. We're going to create this visual representation of what it means to have momentum or a clear path. And then you're going to use that to read your indicators. And you're only going to use 2 charts to do it. Large chart leads the way. Large chart sets the tone. Large chart tells you what's happening. Large chart is the most important chart because without the large chart, you should never look for an entry. Your large chart on the most current bar, this one bar, is going to define direction, momentum, and areas. Your first 2 rules are met on the large chart. You will have the advantage of momentum. You will have the advantage of a clear path if you're following your rules, if you're embracing these advantages. Once you have those on the large chart, then you're going to refine that broad stroke of a brush. You're going to take that overall picture, that scenario, what the people in charge are making happen, and you're going to refine it all the way down to the point where the market is likely to continue. You will pinpoint where the market is likely to continue. You'll use it for entry. And that will be your entrance to the highest probability trend trade. That's going to be the trade that typically wins 70 to 80% of the time when you're following the rules. This is the trade that's going to lay the foundation for everything that you do with the software because it turns you into a chart reader. And we use 2 charts for the same reason that we're not in control. The large chart is the large crowd. The large chart are the people that move the market, the people that have the money, the people that can make it change direction at the drop of a hat. And the large crowd wins, guys. The large crowd wins. They're going to establish direction, areas, momentum. And then there's a small crowd. Don't be in the small crowd, guys. I know that we all want to be our little individuals, march to the beat of our own drummer thing. But in day trading, going with the flow is one of the greatest advantages that you can have because when the large chart says everything is going up and the large chart says that you have momentum and a clear path, these yahoos, this small crowd, they're going to fight it. Because, you know, they got safety pins in their noses and blue mohawks and to hell with the system, right? And they're going to shove the market down in this little fight. But they're going to shove it right down to your best entry, to your point of where the market is most likely to continue. So we love the small crowd. We just don't want to be a part of them, guys. We're going to be remoras to sharks. We're going to let the sharks do all the work, and then we're going to capitalize on the hard work that they've done. So 3 rules. 2 charts, let the large chart lead the way, guys. And then, of course, I do this every day. People believe me eventually on this one. How do I get to where I want to be, Mark? How do I become a confident trader, ASAFP? Well, post your trades in class. Show me what you're doing. Talk to me about what you're doing. Show me the good, the bad, the ugly. Show me everything that you do. But don't just show me your trades, guys. If you have a question about one of those likely to stop areas, take a picture, drop it in the room. We'll talk about it. We'll revisit the rules. If you have a question about momentum, take a picture of some trigger lines, drop it in the room. We'll talk about the rules. If you have questions about entries, the same is true, guys. The more you post in the room, the quicker you're going to get to where you want to be. One of the most common occurrences is we all have egos, guys, and nobody wants to be wrong. Nobody wants to put something in the room that they think is a mistake. The mistakes are where you grow. The mistakes are where you're going to get the best feedback. The mistakes are where you're going to find that success as you progress with the market. I don't want you to be scared to drop a loser in the room. And if you are, I want you to change your name. I want you to go change the name underneath your picture right now. So Jim's become Jane's and Mark's become Mary's. And of course, Bobby's become Bobby Sue's, right? But do that anonymity. So then you're not embarrassed to drop in the room because the more that you post, the quicker you're going to get to where you want to be. And then use the spreadsheet, guys. This spreadsheet is a trade journal. It's provided by Nexgen to you. I'll put mine in the room. But this spreadsheet saved my trading because I was a rules breaker. I was a huge rules breaker. And then I started embracing the idea that I could drop every trade that I take into a spreadsheet. And I'm going to talk about what I see, what I did, how the conditions were met, whether the rules were met. And then I'm going to use the notes section for the feedback. What did Mark have to say to you about your trade? You thought it was perfect, but you traded into a termination condition that bounced the other way 1,000 points, right? So every morning, study what you did yesterday. What worked, what didn't work, what felt easy, what felt forced. And when you ask yourself these questions, you're going to begin to recognize patterns in the market that are bringing you success. But even more importantly, you're going to recognize patterns in yourself. I'm going to recognize patterns in you through your participation that may be creating challenges, whether it is violating a rule or whether it's just jumping in a little early or maybe getting in a little late. We work hand in hand every day, guys, 15 hours live every day, where you get a one-on-one session with me to take what you're doing and learn how to do it better. And that brief historical study each morning will prepare you for the day. It will accelerate the learning. And I put this little side note on here recently. If you're taking 10 trades a day, and that's about normal for a lot of people, especially when you're learning. Sometimes it's 20. But if you're taking 10 trades a day times 5 trading days a week, guys, that's 50. That's 50 pictures a week with annotations and feedback if you're dropping it in the room. That's 50 private sessions to get you where you want to be. And after 30 days, that's like 200. And if you don't have those numbers stacking up, guys, you're not using your spreadsheet the way it was intended. And I know how to not use it because I didn't use it when I first started. My brother told me, use the spreadsheet. And I told him no. He told me to post in the class. I said, I might be wrong. He told me to ask for help, and I never did, guys. And I lost a lot of money in a very short time. So I'm trying to save you that pain. We're going to learn the rules for when it's okay to trade. We're going to look at the high probability trend trade. We're going to discuss the advantages. We're going to look at them visually. I'm going to give you a plan to trade that high probability trend trade. Your job is to simulate, to practice, to break eggs, to go screaming past your limits, and then ask for help to get you back in line. Post in the rules, or post in the class, guys. And here's how. Tell me what you did. Don't say I went long here. Tell me why you went long there. Don't say I chose not to go short here. Tell me why you didn't go short there. And if you take a trade, just tell me what you did and why you did it. There are no wrong answers. You can't break it. You can't mess this part up, guys. This is me going, hey, is that red? And you go, no, Mark, that's purple. Like, no harm done, but now I'm a little bit smarter. Show me where you entered. I want to see your entries, guys. I want to know why you got in where you got in. What made you feel like that was the best spot? And we'll see if maybe we can find a better one. And if we can't, virtual high fives all day long. And then show me where you got out, because this is the second piece of the puzzle, guys. We're going to focus on entries a lot. We're going to focus on getting in at the point where the market is likely to continue. And what you're going to find is these great entries create manageable trades. And it's going to give you the opportunity by using that large chart to hold on for bigger moves, to grab more profits when there's nothing in the way. So if you show me why you did what you did, tell me where you got in and where you got out, you and I are going to work together every day to just do it more efficiently each and every day. And then we're going to simplify. We're going to focus on the high probability trend trade. That's going to be our first run all day long, getting the entries for it. I'm going to introduce you to what's called a medium probability trade. And a medium probability trade means that an issue exists. And if an issue exists, it's your chart reading that's going to allow you to recognize that issue. Typically, when I say an issue exists, it means that you either don't have momentum, a clear path, or an entry area. The first one that I introduce you to is void of a clear path. And it's called a 50-50 trade. And I'm going to give you a plan for taking that one as well. But only 2 trades come out of this classroom typically for the new user. You have to learn the looks so that they're easy. You have to go in and study these looks so that they become easy to repeat over and over and over. And your spreadsheet's going to do that for you too, guys. There's spots for you to put your perfect trades, the trades that are going to get you into a trade, your rules met trades, your advantage trades. Burn those images into your mind. This is what it looks like when nothing is moving, so I can find it when the market is moving. This third tab on the spreadsheet has management ideas, patterns, termination conditions. But your job is to fill out the second tab, the favorite looks tab. This is where your trades are going to be recorded. This is the look that it takes to get me into the market. This is how I managed it. And this is the feedback that Mark gave me to manage it better. Here's my patterns that I'm beginning to recognize. Guys, this page goes on forever. And I'll tell you, the further down you get into it, the more you're going to recognize these patterns at the drop of a hat. So use the tools that are provided. Focus on the best first, and you'll be amazed at where you end up. So let's talk about strong trigger lines, guys. This is the first. This is the rule number one. Good morning, Dwight. Rule number one has to be met, guys. Rule number one, strong triggers, gives you the advantage of momentum. The only way that you can have strong triggers, and I mean this, the only way that it could ever happen is if your background and your trigger lines are the same color. If your background is green, the market's going up. That's it. It's that simple. And if the market's going up, you can protect yourself by only looking for rules for high probability trend trades long. And if the background is red, the market is going down, and you can protect yourself by only looking for rules to be met for high probability trend trade short. And if you never fight the trend, guys, huge advantages in there. That eliminates a lot of opinions, and if nothing else, it keeps you going with the flow. Strong triggers are defined through your T3 trigger lines, and there's two parts to the working triggers. You've got the small triggers. Two solid lines create your small triggers. Two dashed lines create your large triggers. So small triggers and large triggers. When your small triggers break above the large triggers, guys, that's what paints the background green. That's what gets you looking for that odds favorable momentum to the upside. When your small triggers break below the large triggers, that's what paints your background red. That's what makes it so that you know you should be looking for short trades. So if you're colorblind, there's your little cheat. And I actually do have colorblind people in the room sometimes. But strong triggers means that the small triggers have broken above and away from the large trigger lines in an uptrend. It's the separation between the two, guys. This is when the market is most likely to continue in the direction of the trend. This is what we call odds favorable momentum, because the odds are favorable for the market to continue up. It's the separation, like scissors opening, ready to cut, that lets you know that you have strong triggers. In a downtrend, small triggers below the large triggers, both are wide, they're angled in the direction of the trend. It's the separation that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, OFM, you'll see it on charts. That's what leads the way for my new users, guys. Odds favorable momentum is likely to push things in the direction of the trend. Odds favorable momentum is capable of breaking key Fibonacci areas. Odds favorable momentum will cover mistakes, guys. It'll give you that last push in the direction of the trend. Never forfeiting this advantage creates a huge advantage for you. And if we have odds favorable, that is the most favorable look for buying Fibonacci support on that smaller, faster chart, or selling Fibonacci resistance on that smaller, faster chart. On your large chart, that 1 bar event, it looks like a tail or a wick, and you're going to use that tail to study later on to go back and develop trust in the methodology. There's a potential entry for a long. There's a second potential entry for the long. And as the market moves up, you'll notice that the small triggers work their way back, and then inside of the large triggers, the scissors have closed, so to speak. When the scissors close, when the two trigger lines come back together, you've lost the advantage of momentum. You now have weak trigger lines. And when you have weak trigger lines, anything can happen up or down. One is strong, one instills confidence, one makes you feel like you can conquer the world. The other one should have like this giant red flag saying, hey, we're not screaming to the upside anymore. Things may change. And you'll see reversals quite often with weak triggers. So I'm going to go back to, I opened up crude oil, and I want you to see something that's pretty amazing. Odds favorable momentum. There's some of those tails, and I want you to see how the market continued to push up. Odds favorable, you got a pretty good push down, dollars to donuts. I've got a mid band or fibs right here. Odds favorable, there's your tail. The market pushes up. Guys, you can begin to develop trust in this rule number one with the simple task of just scrolling back. Odds favorable, it pushes down, hit something solid there for sure. Odds favorable, it pushes up. Look how they return and weaken. Procedure reversal. Smalls return to the large, you get a bounce. Dollars to donuts, there's a mid band right there. Big push from odds favorable, big push from odds favorable, big push from odds favorable, guys. This is what we're looking for. Is everybody comfortable with the simple concept? Odds favorable momentum sets the tone. Odds favorable momentum should be the first advantage that you look for. Guys, I'm telling you right now, it fixes mistakes. It creates this giant advantage as you look for a trade. But then once you have that advantage, you got to make sure that you're not trading into a likely to stop area. That's where rule number two comes in. We want room to our profit targets, guys. We're in this to make money. Termination conditions false, not trading into an area where the market is likely to stop. Let's start with what are the areas where the market is likely to stop, guys. On your large chart leads the way. Large chart defines areas. We are looking for red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. And guys, I'm going to tell you right now, red could be purple, pink, blue, yellow, green. It doesn't matter. When price trades up to this line, it may stop the market. When price trades down to this line, it may stop the market. So we're going to look for these key areas, divergence highs, divergence lows. And we're going to go through a simple process, just a little recipe that lets us know whether or not it's likely to stop the market. And I'm going to go to the user guide, and I'm going to go to the tops and bottoms section. And I'm going to tell you guys right now, this video, let me see if I can get the link. Guys, this video is absolute mandatory watching for new users as you're trying to determine whether areas are likely to hold or break. But the recipe is simple. The first thing that has to happen, and let me talk about why we look. Let me back up just a second. Why do we respect these areas? Why do we look to these areas to see if the market's going to hold or break? Because these are where decisions are made. Remember that you're not in control of the market. You're just a remora cruising with the Makos, guys. When price reaches one of these areas, that's when buyers buy. That's when sellers sell. That's when profits are taken. That's where people enter positions and exit positions. And the people that are doing it aren't doing it with a little 2 lot like you are. They're doing it with a 2,000 lot, right? So they're creating these potential reversals, these giant bounces, guys. The people in charge of the market react to these key Fibonacci areas, and it's unfreaking believable how accurate these fibs can be. So what we can do to keep ourselves safe, to keep from trading into an area that may stop the market, is when price reaches the area, when that decision is being made. If price reaches Fibonacci support and all of the triggers remain above, support has the potential to stop the market. It's likely to stop the market. It may stop the market. It's never guaranteed because I can't predict the market. But if price reaches, these dynamic Renko bars reach Fibonacci support and none of the triggers break through the area, you guys now know to do nothing, to not trade into that area, to wait just a moment because it can create an untradeable bounce. It can create a fight that you don't want to be a part of, or it could simply reverse the market instantly. Before we talk any more about terminations, guys, write it down. Price reaches the area, that sparks the decision-making process. Where are my triggers? That lets me know whether or not I should be trading. So if no triggers through stops the market, when both your small and your large triggers break through an area, in this case, they broke through support, they got below support, you can see that support begins to act as resistance. Now the area is broken, guys. Now you have a clear path. Now it's okay to look for your rules met. So when the small and large break through the area, I want you to see something. There's that odds favorable momentum. And since it hadn't reached support yet, the path is clear. This is the perfect view of rule number 2 being met. And I want you to see there's one of those tails, guys, and notice that it pulls right back to resistance. you guys are going to pinpoint right where that market is most likely to continue. You're going to enter right here at Fibonacci resistance. And with all of that momentum, you know exactly where the market is likely to go, and that becomes your profit target at the end of it. Guys, if you keep it simple initially, either the area is broken or it's not. Either you have a clear path or you don't. Let's go through the recipe. Price reaches resistance, triggers below, do nothing, sit on your hands. Small and large break through resistance, it now behaves as support. There's your tail with odds favorable momentum. This is where you guys are getting into the market. And it never changes. The recipe never changes, guys. Terminations at a high. This one's using, the first picture is using a divergence high, guys. Divergence means that there was a loss of momentum at this pivot. Divergence is not a termination condition. Divergence is just a condition where the market lost momentum. You can see it because of the magenta line. It's when price reaches the area, the triggers remain below. Now it's a termination condition. Price reaches resistance, triggers remain below, even with odds favorable momentum. It's a termination, no more long trades. Price reaches 1-to-1s, price reaches resistance, no trigger lines break. Guys, there's no reason to hope for areas to break, just let them break. Those are termination conditions at a high. And now we have them at the low in the recipe. Once again, guys, it never changes. That's not a stupid question at all, Walter. So guys, I'm going to share these pictures with you. And Walter, let's go through it. So price is, that's what these bars are. It's just a reflection of price. So if I go to the current market, 71.63, Walter, is where the market is changing. 64, 63. And price fluctuates. It goes up and down, right? These bars are a representation of price. Does that make sense? That's the first step, is just understanding that the bars are price. So watch this. As price goes up, I see Fibonacci resistance in the distance, right? And because I see it, this is a target. Price hasn't gotten there yet. My price bars are still well below. Another bar, a little closer. Eventually, price reaches the area. Walter, where are your triggers? Are they above or below that area of resistance? When price, the top of that price bar, reaches it, they remain below. This is a big visual cue for you to just sit on your hands for a second. Let's wait. Let's see what happens. Eventually, price breaks, right? But that's not what we're looking at. We're looking at trigger lines. Both small triggers and large triggers get to the other side of resistance. Now the area is broken. Now resistance is acting as support. So you just simply turn your attention to the next key area. You'll look for an opportunity in between these key areas. Does that make sense, Walter? Price reaches resistance again. Absolutely no triggers. So that was a great target if you bought a pullback to Fibonacci support when resistance broke and became to support. There's your tail, Walter. We're going to talk about how you guys could have caught this long, and you knew exactly where the market was likely to go, 71.65. And watch what happens. Price reaches. It reaches the second level, and nothing breaks. None of the triggers get through. And look at the reaction. I don't have odds favorable momentum. Look at what the market is doing right now off of that very key area. So you don't know if it's going to hold or break. But when it breaks, what you're going to find is that it very much acts as support. And we're going to talk about how to catch this beautiful entry. And notice that the tail, Fibonacci resistance breaks, small and large get to the other side, it behaves as support. Guys, this becomes your entry for the highest probability trend trade. Right now, what we're learning is how to not trade into areas, but rather trade from areas. Walter, does that clear it up for you a little bit? And until small and large triggers get above this area is never broken. And it's too soon for a short because I'm not going to fight the trend and I don't have momentum. So if I can't go long into resistance, guys, and I can't go short What should I do? What's the best course of action right now, do you suppose? If rules aren't met for a long because of a termination condition, and rules aren't met for a short because I don't have momentum or direction, it costs me absolutely nothing to do nothing, guys. And this is the 90%. This is that waiting for things to just happen. How much room do you need to have a clear path? So, Haji, clear path isn't a reflection of room. Clear path has nothing to do with anything but trigger location. Triggers are below. Triggers are above. That's it. I can't even see my next area. If you're asking how much room does it take to create, to feel okay taking a trade, that depends on your pain tolerances, I suppose. But look at this. With odds favorable and a clear path, that's my next area. I have approximately $390 worth of profit to get to that next area. Does that make sense? And because we're going to use that smaller, faster chart, guys, you were looking for a trade when the market was at 25, which is only 20 ticks. But because you believe in the small chart and the refinement process, you added another $200 worth of profit to that potential trade. So for me, Haji, I like to see at least the ability to make $200 between my broken area and my new area, or my potential entry in my new area. So even right here, I was 3 ticks away from resistance, but because I bought a pullback, I had approximately $180, $190 worth of profit before I ever hit a trouble spot. And when we talk about entries, that will become a little more clear. But right now, we're just going through that process of whether or not the path is clear, or if we're trading into a potential area. And guys, it's okay to sit still and wait for an area to break. You're welcome, Haji. Great question, man. And I've got a great picture already in my head that we're going to talk about the same thing, so I'm going to touch on it a little bit more. If price reaches these 1-to-1s and the triggers remain above, it's okay to do nothing, guys. You're not in charge, but the people that are may react to the area. Same thing with support, same things with these divergence lows. So as the brand new user, keep it black and white. Keep it very simple. Either you have a clear path or you don't. It really can be that simple. But we talked about a medium probability scenario, guys. We talked about the absence of a clear path, but still a potential trade. And this is the middle slide here. Notice that the small triggers have broken through the area, but the large triggers have not. 50% of your trigger lines have made it above the problem area. 50% have not. Guys, when you have odds favorable momentum, I stated earlier that odds favorable momentum can break areas. When you have odds favorable momentum and the small triggers break and the large triggers don't, we call this a 50-50 look. 50% above, 50% below. This will be your first medium probability trade. This will be the first trade that you take. I'm going to give you a plan for it when you don't have all the advantages. And the advantage that's missing is the clear path. So you're going to rely heavily on momentum. If you take this trade, you're going to rely heavily on the perfect entry area if you take this trade. So this will become your first medium probability trade. 69.80 has the potential to break, but it hasn't broken yet because both sets of triggers aren't to the other side, which means that it may or it may not. You don't know. It's not high probability. It goes into that medium probability. You're going to have to take the perfect entry, and you're going to have to be able to read your indicators fast enough to manage that trade. That's what we're developing with the simple black and white, is the ability to throw a little gray in there. And I want you to see down here, even with odds favorable momentum, that line never broke. Large triggers never got through it. It turned red, but the trigger lines never got through that area. And sure enough, it went up and broke to the upside. So potential removes the clear path. Removing the clear path takes it out of the realm of high probability. I'm going to give you the perfect scenario to take this trade so that you can catch this tail and feel confident, and you'll double the trades that you take, maybe even triple with that. High probability or medium probability trades become a big part of your plan. The area ultimately broke, and now we're into the next area, guys. Remember, 90% of your day is spent waiting. 90% of your day is spent reading indicators. Divergence is formed off the pivot. Divergence is a loss of momentum, guys. It's not a termination condition. This is not a termination condition. This is a loss of momentum that we see visually with the cyan line. It means that when the sellers were rocking it to the downside, the buyers pushed back and stole their momentum. That's the easiest way to describe it. If you wrote down that recipe, price reaches an area, price reaches the decision-making point, this doesn't become a termination until price reaches the cyan low. When it reaches the cyan low, the only thing that you have to do, Jorge, is ask yourself, where are the trigger lines? And if they remain above, it's a termination. That's it. No more short trades. Even with a red background, even with red triggers, guys, you know that this is a line in the sand. There's no reason to risk your capital. If this termination creates a full reversal, now it's a strong bottom. It's a good bottom. That's the precursor for the highest probability trend trade that you could take. So this is called a pivot stop out. Here's your pivot with a loss of momentum. Here's where everybody that tried to go short again got stopped out and the buyers took over because they didn't have Nexgen or that simple recipe for terminations. Pivot stop outs are powerful. They're even more powerful when they coincide with Fibonacci resistance, guys. It still doesn't guarantee a reversal, but it increases the likelihood. 90% of your day is doing nothing. 90% of your day is waiting for advantages. Price reaches resistance, no triggers, no trades. Sit on your hands. It bounces all the way back to support. Triggers remain above. Sit on your hands. It reaches resistance with green triggers. Everything stays below 2 areas of resistance and a divergence high. Now I have a pivot stop out of a divergence high. It coincides with 2 areas of resistance. Guys, if you go long into that area, it is financial suicide. There's no reason to do it. Your rules say don't. Your gut's going to tell you to do it because you're tired of waiting. Ultimately, this termination reverses the market. Small get below the large go red. Everything's green and agrees. It provides you odds favorable momentum. Look at the gap between the small and the large. And price has not reached Fibonacci support, which means that your path is clear. And guys, there's that tail. That's the 10% after the 90% of waiting. That's the highest probability trend trade that comes from a termination condition that reverses the market. That's the trade that typically wins 70 to 80% of the time, that offers confidence through the memory of success. Guys, this is the trade that we're studying, that we're adamantly learning so that we can gauge the advantages and never miss this trade, never miss this entry. That's your goal as a brand new user, is to be able to look at your charts and understand what they're telling you. And this is my favoriteest picture ever, and you're about to see why. Because with odds favorable momentum in a market that's likely to continue in the direction of the trend, it is continuing in the direction of the trend. And then it reaches Fibonacci support, and you guys have to ask yourself, did the triggers break? And the reality is they did not, so there's nothing to do. And momentum breaks the area and screams all the way down to those yellow 1-to-1s. No potential entries there. You're still waiting. You're being patient. And when it hits the 1-to-1s, the brilliance in this room says, whoa, my trigger lines are above those 1-to-1s. I'm going to do nothing because there may be a reaction. And guys, I want you to see the reaction. You guys that had the fear of missing out went short, and you were separated from your money. And then you were convinced that it was still a short, so you jumped in without momentum, without a clear path, and you were separated from your money again. And you said, well, hell, if it's not going to go down, then it's probably going to go up. Look at that green background. All your triggers are below resistance. For the 4th time, you were stopped out of a trade. For the 5th time, you were stopped out of a trade. For the 6th time, you were stopped out of a trade. Guys, this is your 90%. All of my triggers were below resistance and above support. Guys, you're watching this thing in a channel and consolidation. You're visually seeing the fight between buyers and sellers. You never had a rule met, so there was never any reason to lose a penny in this area. And then my patient users, you guys that trust the process, recognize that eventually smalls and large got above resistance and it began to behave as support. And you had the momentum that says that the market is likely to continue in the direction of the trend. And there's that tail, guys. There's that entry that we're about to talk about. That's your 10%. This is the one where your patience is rewarded, where you guys catch the absolute best of the best, and it runs with that momentum all the way up to Fibonacci resistance. And guys, this is approximately $470 worth of profit. The average user is trying to make $250 a contract, guys. That's your daily goal twice over. We're learning to be patient so that we can have the absolute best, guys. Does that make sense to everybody? Are you guys good with this? Price reaches do nothing if the triggers don't break. Small and large clear the area. Guys, let's look to get paid. Let's use the clear path. And then there's one more that we're going to talk about. And before I talk about that one, large chart defines areas, guys. Your large chart's where those lines happen. The large chart is where the price reaches, and if the triggers don't break, you're doing nothing. There's going to be one small chart termination condition that I'm going to talk about. It has nothing to do with lines, guys. It has nothing to do with the lines on the large chart. It has nothing to do with the lines on the small chart. It's going to use divergence, a loss of momentum. But you're going to use divergence on a smaller, faster chart to identify when the large chart may be changing, but it's too damn slow to give you the information, right? Broad stroke of a brush. Everything says up, the path is clear, but it goes down. How come? Well, something changed. You're not in control of it, but your small chart can help you identify it. Same thing going to the downside. And this final termination condition that's going to happen on your 5-1, guys, is 3 divergences in the same price range. 3 divergences, 3 losses of momentum. You visually see it through the cyan line from a low or the magenta line from a high. 3 divergences in the same price range may terminate the trend. It might stop it. It might create an untradeable bounce. It may push it the other direction forever. Who knows? I don't. But I do know that if I see these 3 cyan lines, that's it. No more shorts. That's a termination condition. I can also use these if I'm in the perfect short and I see 3 cyan lines. Get the hell out. Don't hope, don't wish, don't want. It's telling you things may push up. Same thing from a high. 3 magenta lines may stop the trend. 3 magenta lines becomes an outstanding management opportunity. It becomes more powerful when your small triggers work their way inside of the large triggers. Anything can happen triggers coinciding with 3 losses of momentum. Guys, stop hoping, stop wishing. You have so much information at your fingertips telling you no more short trades. And it becomes even more powerful when it creates a head and shoulders pattern. When you get a higher pivot from a low than the previous or a lower pivot from the high than the previous. All of these happen on the small chart, guys. And these 3 divergences on the small chart are going to help you recognize the change on the large chart. When the large chart can't give you that information fast enough. Is everybody cool? Termination conditions, guys, we've done it. Large charts led the way. It's defined direction with a green background. Large chart defined momentum with strong trigger lines. Large chart defined your areas using Fibonacci resistance, support, and trigger location. Guys, you are 100% cleared for takeoff on this large chart. Does everybody see it? Give me a Y, please, especially if you're brand new. I see some new names in here. Jorge, does it make sense? Odds favorable? Clear path? Jim N says it does. Strong triggers, nothing in the way. It's okay, guys. You be as quiet as you want. I understand this stuff. Once I have it, I have to refine it. I have to let that small crowd do their thing, guys. Those yahoos that don't want to run with the click, the yahoos that want to fight momentum, that want to fight the clear path, they don't want anything to do with up, so they push the market down, guys. That's rule number 3 for us. We're going to use a limit order to buy or sell a pullback, that small retracement in price that fights everything. And we're going to buy it at an area. We're going to use the lines on our small chart. These are where those lines on the small chart come into play. And those areas are going to be tucked inside of what we call favorable large triggers, guys. And favorable large triggers means that your large triggers and your synthetic triggers The smooth dashed and the step dash are one on top of the other. They're riding piggyback. They are so tight on top of one another and trending wide in the direction of the trend. Guys, this is favorable large triggers. These are moving averages and price corrects to them. That's the easiest way to look at it. When I have a bounce point inside of those favorable large triggers, fibs, mid-bands, yellow 1-to-1s, this becomes the most likely continuations point. This is where you guys are going to pinpoint the bottom or top of that tail. This is where you're going to enter the highest probability trend trade. If these trigger lines are split from one another, if they're separated from one another, all you're doing is increasing your risk in the trade. All you're doing is making a larger area where it may bounce. The tighter the triggers, the smaller the window of opportunity. The smaller the continuation point, the less risk you're going to have in the trade. So embrace the idea as a new user that those tight triggers create a huge advantage. But when the large chart says go, when the large chart is odds favorable, when the large chart has nothing in the way, when the large chart is telling you look for an entry, this is what your small chart's going to look like. This will be your 5-1, guys. And it should have strong triggers. In a perfect world with the highest advantage, the same momentum look on the large chart is the look happening on the small. You're going to identify your favorable large triggers. And you're going to look at the areas that may fall within. Remember, these are moving averages. So these are coming up as the market's going up on that large chart. So that mid-band or this fib is probably going to get swallowed. It's kind of like Jaws preparing to breach. But we need the small chart to do their thing. We need the small crowd to fight, guys. We love the fight. We encourage the fight. We're going to liquor up the small crowd just so they'll pick a fight. And it starts with a reversal bar. This is the beginning of them going against the trend, going against the momentum. And when you get this reversal bar on your small chart, you're going to look again at your favorable large triggers, and you're going to look at the areas that are falling within them. Fibs, mid-bands, yellow 1-to-1s. And you're going to create your window of opportunity, the point where the market is most likely to continue. You are going to pinpoint. And it's going to extend from the highest point of support inside of favorable large triggers. Write it down on a piece of paper. Inside of favorable large triggers to the lowest point of support, furthest away from price, inside of favorable large triggers. Make a box, draw it on your screen, whatever you need to do. This is where the market is most likely to continue. You're going to activate your limit order at the top of that window, guys, because remember, your large chart was very clear about the large crowd's intentions, right? Your large chart said that you had odds favorable momentum, that the market was likely to continue in the direction of the trend. Your large chart said that there was absolutely nothing in the way to create a bounce. Nothing. So there were no speed bumps. There were no brick walls. And then your small crowd, small chart, said, let's go the other way. When they did, you lit up because you said, oh, I know what happens next. Let me look at my favorable large triggers. Let me see if there's any areas that fall within. Fibs, mid-bands, yellow 1-to-1s, because these are like a brick wall for the market to bounce off of when they're inside of favorable large triggers. And you said, that's an awful lot of space. I can refine it even more from my highest point of support, that mid-band inside of favorable large triggers, to my lowest point of support, those yellow 1-to-1s inside of favorable large triggers. I've just pinpointed where the market is most likely to continue. I've pinpointed my bounce point. And all you guys have to do is activate a limit order right at the top of that window. And if it comes back and hits it, you're in a long position. And you're in a long position with strong trigger lines on the large chart, which gave you the advantage of momentum. You're in a long position with no termination conditions on the large chart, which gave you a clear path. And you're in a long position now with an entry area, that point where the market is most likely to continue. And guys, this is your best of the best. I want you to focus on this entry for 20 days, getting into the market where it's most likely to continue, because great entries create manageable trades. One of the genius things, I think, don't tell my brother I said he was genius. If I know where the market is likely to continue, well, then I also know where it shouldn't go. And I can place a protective stop 4 or 5 ticks outside of that window of opportunity to the point beyond the bounce. And if the market decides that day, because I'm not in control, right? I'm only controlling whether my rules are met. If the market goes beyond that mid-band and hits a fib, that's cool. I'm still in the window. And if it hits the next area of support, I'm totally okay with it. I'm still in the window. And if it drops all the way down and it's $100 against me, it doesn't faze me because I'm still in the window. I'm developing trust in the beginning. But the cool thing is if those jerks decide to go beyond the window of opportunity, I've got a protective stop. I have something there to pull me out of the position, to make sure that I don't sit and hope, to wish, to want. And the only thing that I can do here is remind myself that anything that wins 70 to 80% of the time, by the laws of mathematics, is obligated to lose 20 to 30% of the time, which means every 10 trades you take, you have the potential to lose 3. And guys, you don't get to pick which 3. It doesn't matter if your rent's due. It doesn't matter if your kid has a tuition payment. It doesn't matter if your wife wants a new watch. You don't get to pick which 3. Which is why this is why you develop the trust, guys. This is why we're going to go back and study this. You're going to practice it. You're going to develop recognition through repetition. You're going to make sure that you're so comfortable with the idea that those 3 advantages give you a statistical advantage in the market that you'll never miss this entry. You'll never miss that trade. You'll take it every time it sets up because you know 70 to 80% of the time this is your most likely outcome. Profit target reached. And once it starts to do what it's supposed to do, you can reduce your risk below that reversal bar, guys. You can manage your risk long before you ever manage your profits. That's a sign of a mature trader. And guys, that is your high probability trend trade. That's your best of the best. This is what we're looking for each and every day. This is what we talk about for the first hour. And it starts on the large chart. It always starts on the large chart. Strong triggers, nothing in the way. And when this happens, you wait for a reversal bar. Let the small crowd fight. And when they do, find your favorable large triggers. Insist on your favorable large triggers from the top line to the bottom line. It doesn't matter if it's the large. It doesn't matter if it's the synthetic. It doesn't matter which of those the area falls within. But you're looking from the bottom to the top. And then you're refining it. Your lowest point of resistance to your highest point of resistance, closest to price, furthest from price, inside of favorable large triggers. And from there, you're going to activate a limit order, and then you're going to pray because there's nothing for you to do, guys. You've given yourself the advantages. You've identified the bounce point. And the only thing that's going to happen is either it's going to go without you, it's not your money, or it's going to hit your entry, guys. And you're in with all those advantages, and you feel good, and you're high-fiving the dog, and life is happy for you because you know you have a 70 to 80% chance of success. Are there any questions about the high probability trend trade? Guys, that sequence that I just went through is in the upper right-hand corner of the client trade section. We put that together in class one day. I'm going to give you my spreadsheet again if you want to steal it, just in case yours doesn't have that. So how do we study it? How do I get good at this, Mark? How do I develop trust? How do I get to the point that when I've got odds favorable momentum in a clear path, how do I know if I had an entry? Well, circle the tails, guys. And if it lines up with support inside of favorable large triggers, does everybody see that? Let me blow it up. A mid-band and a fib. Odds favorable, the tail end of it. Small and large are above resistance. It's behaving as support. The market pulls back and bounces right off of that freaking area inside of favorable large triggers. Guys, do me a favor and give me a yes. Let me know that you see what I see here. Let me know that you see that the large chart led the way. And watch this. Let's develop some trust. Most people don't want to do this because it's not as fun as trading, but watch this. The rules are met if I circle the tail. It lines up with the entry. Your job is to open up your TechSmith capture. It loaded when you got software, guys. Mine's coming up right now. We're going to take a picture together. Because pictures are how you and I have a conversation. Here's my capture software. Giant red button. Click it. And I'm going to click and drag, guys. If I hover over one chart, it's only going to give me one chart, but we're 2 chart traders. So I'm going to left click at the upper left-hand corner of my charts. I'm going to hold that button down and I'm going to drag it to the bottom right, making sure that I have my timestamps, making sure that I have my prices. Because remember, we're gonna line the two up. When I release it, it's gonna ask me two things, guys. It's gonna ask me, do I want a picture or do I want a video? If you are a little bit more advanced, but you find yourself talking yourself out of trades, talking yourself out of positions, if you find yourself breaking rules, video. When you start to take a trade, video, and be as vocal as you can the whole time. What you see, you'll be amazed at how you rationalize poor trades. I know because I've done it. I'm going to click capture an image, and it's going to give me an image preview, guys. And this is where the most important thing that you can ever do happens. If you had odds favorable momentum, I want you to draw an arrow, click and drag that chat box, and put it in there. Let me know why you're doing what you're doing. Even better, you can say odds favorable momentum, but if you're learning the process, go one step beyond. Say smalls are outside of large. This is strong triggers. Most of you don't want to put that much effort into annotating a chart, right? But if you're learning your rules, doesn't this right here create a correlation between the two, making it easier to recognize in the moment? And then do the same thing. You know what? We'll put this up here. And use the call out button, guys. Please put clear path. Write your advantage. Why is it a clear path? Small and large broke. Just call it red fib. It's easier to spell than resistance. And now there is room to the next target. So not only are you saying that rule number 2 is met, you're defining exactly what it takes to have rule 2 number met. And once again, you're creating a correlation between the rules, between the advantage and the visual, guys. This is huge. And then finally, tell me where you entered, right? And once again, language is important. At support inside of favorable large triggers. You're using the language that gives you the best entry. You're creating, once again, I can see my area inside of favorable large triggers. And then maybe exit at fibs. Guys, this is how you get to where you want to be. This is the best of the best. This is your highest probability trend trade. And if you took this trade today, you're already halfway to your goal, right? Click copy and drop it in the room, guys. And then let's talk about it. This is what the second hour is. This is us talking about everything that you're doing. And then click upload. And it's actually going to give you a link to that picture. It's going to put it in the cloud. And if you copy that link, I want you to open up your spreadsheet. I want you to go to your favorite looks. And I want you to put in a hyperlink, guys. I want you to drop that address. And I want you to put this right here. This is my perfect long. And now you know exactly what you're looking for. And if you weren't sure that it was the perfect long, give it a minute, because I'm going to come back and look at your picture and I'm going to say, absolutely, you did have odds favorable momentum. And without question, your path was clear and you couldn't have done a better job on that entry at support inside of favorable large triggers. And guys, check this out. If you entered at 08, 09, your risk was 4 ticks once you got a reversal bar. $40 risk for $400 in profit. That doesn't suck. Are there any questions about the high probability trend trade? Are there any questions about taking a picture? Are there any questions about annotating a picture? Do I have odds favorable momentum right now, guys? Nope. Thank you, Cav. Do I have a clear path right now? No. So relax. Just relax. It's been going up all morning? So show me both charts, Biff. Are you comfortable showing me both charts? Because if you show me where divergence is scaring you, we can talk about it. This is crude oil, right? Let's go to crude oil real quick, guys. Let's grab a lesson. Pivot stop out, no triggers through, so there's no long trades here. Would you agree? Don't go long into this. That's just a bad idea. That's okay. You can actually click and drag between two screens to create one picture. I've done it a lot. So like if you take your capture software and click capture, I can go over to my third monitor if I want to. And then I just click and drag all three monitors, and it's huge. So maybe I bring it down a little bit, but you can still do it. So if you have large chart on one screen and small chart on another, remember all you need from the large chart is that most current bar, right? So you don't have to show me 7 days worth of data going back on your large chart. You could literally just show me your large chart and then the potential entry point on the small chart, just like that. I'm all about solving problems. So even on three monitors, it's okay. Because your small chart is probably to the right of your large chart, right? So give me the most current bar on the large chart. But let's go through and take a look at it. And we'll start at 7:07 a.m. So we had a termination condition, right? Odds favorable, into the 1-to-1s, no triggers break, nothing to do. They come and retest with all the momentum. Still nothing to do to the short side. And then we get a full reversal. And we get odds favorable momentum. And then, Biff, what we have on this one right here, I'm going to circle the first one. This is a odds favorable from a termination. Small triggers outside of the large triggers. Large triggers are wide, but they haven't broken resistance yet. Do you recognize this as a 50-50 look? This is an area with the potential to break. It's with all that momentum from a good bottom, it has the potential to smash through. So we go to the smaller, faster chart, and that was at about 7:44. So let me come back. With all that momentum, this area has the potential to hold. And check it out. It never got back to the favorable large triggers. It never bounced off of the area inside of them. Here's the sad realization for a lot of people. Because we want to be in every move. This pullback didn't hit an area inside of favorable large triggers. This is not my money. So there's your first one, Biff. And that's cool, right? It happens, whatever. And then we come up and we come to the next odds favorable and we're looking for the pullback. And once again, we're in one of those 50-50 scenarios where the small triggers are absolutely smashing through. The large triggers haven't quite made it all the way through. And if you look at the smaller chart, we have a divergence. I don't have a clear path, but I do have a divergence. Guys, for the brand new user, this is a red flag that says don't take it. For someone with a little more experience, you may take it because of the good bottom. So, Biff, if this divergence kept you out, totally cool. Does that make sense so far? I'm trying to walk through the whole scenario. And this is how you can see if you missed an opportunity, guys. So this could be one of those ones where you say it's a 50-50 with divergence. That doesn't fit my rules. A lot of you guys have those rules. If you're following the plan I'm going to give you, you're going to see that. And then, Biff, here we had momentum and a clear path. Can you give me a Y if you see that? Because what we're doing is we're looking for our opportunity to capitalize. Everybody sees that? Where I do have odds favorable and I do have a clear path. So guys, this is where you have to take those lessons. And I'm going to take a picture of this one. And I know you guys don't want to type, and remember, I know this. I have odds favorable momentum. That's rule number 1. I have a clear path. That's rule number 2. I have an area inside favorable large triggers. That's rule number 3. Everybody sees it, right? Odds favorable, clear path, area inside of favorable large triggers. And here's a big deal. And this is why this room is so valuable. But Mark, there are 2 divergences against. Who thought that? Show me your hands. It's okay. You don't have to. But I want you to. Who thought that? Who thought, oh shit, 2 divergences. I can't take that trade. Yep. Amen, Haji. But if you never post this picture, if you never annotate it, if you never talk about it, how am I going to be able to go back to the rules? How am I going to be able to go back to that part where I said, guys, the only termination condition that I will ever respect on a small chart is 3 divergences in the same price range. When the rules are met on the large chart, take the damn trade. If you never post in the room, I never know to say that, right? If I don't know what your opposition to the trade is, I don't know what to do. David, right click on your chart, go from 10 days back to either 9 or 11 and see if that clears you up, brother. You've got some sort of data glitch in there from the days back. So change it from 10 to either 9 or 11. Guys, does that make sense to everybody? So with odds favorable and a clear path, should 2 divergences have scared me out? What do you think? I think no. The way it's taught, the way it's simple, the actual rules in their most basic form say don't miss this trade. But what we just saw, and Tony, thank you for putting yup. What we just saw is you creating rules beyond the basic rules, beyond the most foundational approach to taking the high probability trend trade, is you created an opinion. You created something that was no longer rooted in patterns that repeat themselves over and over, and you gave so much power to 1 pink little line or 2 pink little lines on your small chart that you were willing to miss this entire move up to fibs. So guys, this is why we post in the room. This is why we keep it simple first, because if you can't take this trade without hesitation, you need to work on it a little bit more. You need to develop trust. You need to get to the point to where you're okay taking that one. And then Biff, going to the next one. Here I have a clear path, but I don't have the best look in the triggers, but I do have a good look on the triggers. This is just a strong trending market. So I have an entry area and I have a clear path, but I know that I don't have the best momentum. So what I can do is say I'm missing one of my advantages. I'm not going to expect this look to win 70 to 80% of the time, but I still have 2 of the 3. I'll manage it. But I'll use those divergences on the small chart to help me with it. 1 pushes me back to my entry. There's your 3rd divergence. Get the hell out, right? Or even better, just get out at the fib. So there were 2 opportunities to take advantage of the long trend. Here we didn't have a clear path or momentum. We're not doing anything. Here we didn't have a clear path or momentum. We're not doing anything. Here we didn't have the advantage of momentum, but we did have a clear path. No momentum, clear path. I only had 1 area inside of favorable large triggers. If I took it, I might have lost a couple ticks. hoping that this continues. Does that make sense, everybody? When you go through it over and over, clear path, 2 divergences, and you made money all the way down, Tony? It's amazing, isn't it? If you stop making it complicated, if you stop overthinking and you really get to the point to where all you do is embrace advantages, it can be easy. Nice job. Nice job. So how do we get good at it, guys? Go circle tails. All day long. Go circle tails. And if it hasn't reached the fib and you have a big tail and the momentum is great and you're coming from a termination condition, what's it look like? Let's see. Oh man, there's a pullback to resistance right inside of favorable large triggers. There it goes again. I can't handpick these guys. This is live market. My triggers didn't break 1-to-1s. I've got multiple divergences in the same location. I don't care if this market goes down. My rules aren't met. S&P has struggled a little bit last couple days. I'm looking for a tail with the rules met from a termination. There's one. Had to be patient on this one. What's it look like? Do you guys see how far I had to scroll back to find this clear path? Odds favorable. It pulled back directly to resistance inside of favorable large triggers. 2 divergences didn't scare me. Guys, if I chose to get out at the fib, that's outstanding. That would have been 6 points, which is stupid math, $300. So guys, don't overcomplicate it. Keep it simple in the beginning. Focus on the best of the best. Make sure that you have the advantages. I'm going to give you a checklist to be able to do that. High probability trend trade checklist, guys. Print this out on your desktop. Police yourself every time you take a trade. Write these on the chart so that you can get them visually with what the words mean. Same checklist with the visual right next to the words. There's no excuses, guys. All you have to do is the work. Learn to drive the car. And then finally, I'm going to give you the KISS plan. And this is how we're going to wrap up the first hour. Everything we do is about advantages. Everything we do is about getting the best of the best, giving ourselves the highest chance of success, and making sure that we're protecting ourselves, that we're protecting our assets, that we're giving ourselves every opportunity to be successful. Guys, this plan is a stepping stone in your trading journey. This plan is the beginning. This plan keeps you focused on great entries. This plan is designed to get you into the market at the correct spot. There's a reason that the high probability is above the medium probability, because I want you good at this before you start trying to be some sort of badass, catching all the trades that you see the people in this room that have been trading for a year catching. Get good at it. This is your stepping stone, guys. It's designed to optimize your chances of success. It's designed to do it with the high probability trend trade and that medium probability 50-50 trade. You're going to create your own plan based on your ability to read the charts, guys. And you're going to do that through simulation, through study, through class feedback, and continuous practice. This plan keeps you focused on the absolute best of the best until you get to that point, until you are a chart reader. Don't fight the large chart direction or triggers, guys. Financial suicide. If you can stick to this one part, if you deleted everything else from here, and you never fought large chart direction or triggers, you'd have a better chance of being successful. You're going to define your entry, the best of the best entry, where the market is most likely to continue. You have very specific mechanical criteria to get you into the market. And now you have to do something with that great entry, guys. So when you get in at the area inside of favorable large triggers, You're going to put your stop where the market doesn't go. This mechanical, pragmatic approach is nothing more than if-then. It's going to eliminate your opinions, your hopes, your wishes, your wants, and it's just going to have you being very, very mechanical on your management. If you get in at the area inside of favorable large triggers, then your stop goes where the market shouldn't. And you sit on your hands, you put them in the air, you roll your chair back, you do nothing. You either get stopped out for a loss or it gives you a reversal bar. If the market gives you a reversal bar, then you reduce your risk 2 ticks above that reversal bar for a short, 2 ticks below the reversal bar for a long. And once again, your hands go in the air. Your chair gets rolled back, hands off the mouse. You either get stopped out for a small loss, which is a totally normal part of a positive equity curve, or the market's going to go to your first target. And on this KISS plan, the first target's $100 because getting paid creates confidence. Getting paid makes you happy. Getting paid gets the serotonin flowing. Getting paid is the goal. You just got paid $100. NinjaTrader told you that when it hit the target. Not only did you get paid, but you are going to get rid of your risk. You're going to go to break even. And I'm going to tell you right now that break even stop's going to get hit a lot because it's a ridiculous stop. It's not at all where the market shouldn't go. But for the new user, what we're doing here is we are reducing 100% of our risk. We've already made $100 in profit. And we do that to remind you that the large chart said go short. The large chart said odds favorable. The large chart said clear path. The large chart dictated why you got into that trade. So you're going to sit tight and you're going to hold on and you're going to let the large chart do its thing. And if it hits the second target, it's only $200 away, guys. Quick profits. We're creating confidence right now as you become chart readers. But that's a $300 trade on a 2 lot. And the cool thing is if it's a 4 lot and you instill the exact same logic, that $300 trade becomes a $500 trade, right? And if that's all you can do all day, every day, is take $300 on a 2 lot, that's a $6,000 month, guys. That's a $72,000 a year. And on a 4 lot, that becomes what? Oh my God, that's math. There's your $96,000 a year. But the idea isn't that you catch every move. Every move doesn't belong to you. No matter what you want to have happen, the only thing you'll ever be in control of is whether or not your rules are met. And if your rules have been proven to provide you a statistical advantage, you've got to trust them enough to never hesitate when they are met. How do I do that? Guys, snap pictures all day long. Get feedback. Capture it when there's nothing going on so that you're ready for it when there is. Post in class. Fill the spreadsheet. Get your feedback. Rinse and repeat. Keep it simple. Don't make up rules beyond the simple rules, guys. Don't add things where 2 divergences kill your high probability trend trade. Don't add things where if a fib goes from red to blue, then you automatically have to go short, even if the trigger lines haven't broken it, or long, even if the trigger lines haven't broken it. Keep it simple, keep it focused, guys. So the KISS plan is my gift to you. It talks about entry, pragmatic management, and then it talks about the 50-50 trade, that medium probability trade, that one where the areas have the potential to break. And I want you to notice something. Remember, optimize your chances of success with the 50-50. Odds favorable is an absolute must on both charts. Notice that it says no divergence on the 5-1, not sacrificing momentum when the area isn't broken. It insists on a good top or bottom. These are all concepts that you learned from this trade. Enter the area. You know where the area is. Notice that it reminds you, divergence, no trade. What do you think kills 50-50s more than anything, ladies and gentlemen? No divergence on the 5-1. Divergence, no trade. If divergence prints, exit trade. How many times are you going to take the trade with a loss of momentum and hope that it works? Well, eventually your plan may change a little bit. But as a brand new user, if you really want to optimize your chances of success, you have to be willing to miss a trade when your rules aren't met. It's great practice for patience, guys. It really is. That's in the room as well. Are there any questions about the high probability trend trade, guys? Are there any questions about momentum? Are there any questions about a clear path? Are there any questions about how you get to where you want to be? Because I'm going to go stretch my legs and take a break. I'm going to walk a lap. I'm going to refill my water, probably take some allergy medicine. Do the same, guys. Get away from your computer for a second. I'll be back in 5 minutes. Set a timer. And then we will get into that second hour where I start looking at all the pictures that you guys have posted. We will relay every picture back to momentum, clear path, and entry area, even if it's not a high probability trend trade, because we're going to keep the lessons going for the new users here. If you posted a picture and you're not telling me why you did what you did, I have to make it up. I have to assume what you're thinking. Don't make me do that, guys. I stopped reading minds 27 years ago when I got married. I haven't had to do it since. Don't make me start today. I'll see you guys in about 5 minutes. Post them if you got them. All right, guys, I'm back. So let's get into taking a look at the pictures. For those of you that are brand new, first hour is all about rules. Second hour, I'm going to scroll to the top. Hopefully you can see that. And I'm going to start clicking on the pictures that you guys have posted. We're going to talk about the advantages. And I'm going to remind you guys, if you didn't annotate your charts, I'm just going to make something up. So we'll see what happens. Scrolling through. And we had some good stuff from the beginning here. Joel pulling an all-nighter. Odds favorable momentum because of overwhelming downtrend. So because of an overwhelming downtrend, Joel was willing to trade into a termination. He was willing to trade outside of favorable large triggers. And he's just using the mid-band to run with a strong trend. And guys, I'm telling you, when you learn to read charts, stuff like that works. It doesn't work always. You keep doing it until it doesn't in a really strong trend. And then Joel directly into a termination condition. Didn't work out. Terminations for the win, right? And you're absolutely right. Anybody, it's easy to check yeses. Make sure the rules are met. Type them on there. Guys, it's important that you make these mistakes. It's important that you make these mistakes so that you know what mistakes you're prone to making. And then Joel, we're going to do one more. And guys, I'm not going to lie. Sometimes I feel like I'm beating you guys up, but I'm really not. But it's easy to see things after the fact. It's easy to see things that maybe you don't see. So let's blow this up just a little bit. Let's go large chart first. Odds favorable momentum, clear path, right? This is the bottom line of my large triggers. And it never gets above that yellow 1-to-1. It never does. It never gets above that divergence high. So, Joel, just for the sake of education, is it a clear path or is it a 50-50? Guys, let me know if you see what I see. It's a 50-50, right? Which means that it's not a clear path, which means that it can't be a clear path, which means that it will require a different level of management if you get into the trade, and that's okay. You're coming from a termination that created a full reversal, and that's what pushed you up through all of this. And then we've got the 50-50. The area is not broken, and then, Joel, there's your second divergence in the same price range. The first divergence came directly off of the fib that you're hoping breaks. The second one came from a little bit beyond. But that's two in the same general price range. So you're forfeiting momentum to take a shot. I love your shot. I think your shot was a great shot coming from a great bottom. And it was a small loss. That's okay. Small losses are a normal part of a positive equity curve, aren't they? Totally cool. But this is one of those things where if you know what you're getting into, if you know that it's not a clear path, if you know that it's like, hey, it's odds favorable, but it's not quite clear. Let me make sure that I'm checking other things. Let me make sure that I'm not giving up other stuff. Always knowing what you're against, because Joel, you're human, because you're excited to get into a trade, because you know that if it wins, it feels good, right? Why do we date the crazy redhead over and over? Because when she kisses you, it feels good. It's nice. But the reality is that she's just as likely to hit you with a baseball bat. And that's what makes it fun. But trading can't be the same as that, right? Trading has to be a little different. And when you give up the advantage of a clear path, it's okay. Like, your money's worth it. I have a picture about 50-50 entries, guys. And that's literally the language that was put on this. And this was from forever ago. My money is worth a perfect entry. My money is worth a perfect entry. Guys, I hope your money is worth a perfect entry. I hope your money. If you have so much money that you just don't give a crap if you lose it, that's cool. Have fun. Do whatever you want. But guys, we're in this to get paid, right? And your money is worth a great entry. Your money is worth no divergence. when the path isn't clear. Your money is worth a tiny little bit of risk when the path isn't clear. All the kids today talk about self-care and self-love. That's your self-care, is avoiding these things that begin to take away your advantages. Joel, it's a great picture, and I appreciate the lesson because I think it's an important lesson for everybody. Wanting to be in a trade can't supersede being in the right trade. And if I'm going to take losers, guys, they have to be rules-based losers. Ron, when everything is screaming down, you look for your opportunity. Bingo, bango, quick hits, odds favorable, everything goes. Ron, I love it. What a great trade. Everything clears, odds favorable. And guys, this is just a different way to do it. This is Ron taking a chart read. This is Ron saying, man, I trust in momentum so much that when price clears an area, I'll take a little snippet on my smaller, faster chart. And notice he says that was a fast $750. Pretty cool, right? $15.75 in 15 minutes. So Ron, the second half of the question is, how long did you wait to be active for that 15 minutes of your life? Because that's where accounts grow and die, right? How patient did you have to be? You didn't go short into support, right? Not so bad this time. Sometimes the 13-2 background changes from green to red or vice versa, and then the 3 or 4 bars through it, it changes back. It's not a software issue. Great question, Big Game. Let me cover that. So what makes a background change? Let me show you exactly what makes a background change. And this will probably clear it right up for you. So let me go to my awesome pictures. And I'm going to take a picture of the picture for you. So what happens is when, whoops, wrong one, is when those small triggers start to break, right? No, I know exactly what you're talking about. The area, the fib changes from red to blue, or the direction changes from red to green, or green to red. So what happens, Big Game? And let's go through the background color first and hope this helps. When your small triggers break above the large and just one line starts to go, that's what paints the background green, or that's what paints the background red. And these are moving averages. So if you find when the smalls are trying to break, if there's a little bit of, gosh, I keep doing that. If there's some price fluctuation going on, those trigger lines are going to fluctuate their position on the large triggers as well. And you may see this most current go from green back to red to green to red as the moving average is trying to get above the large triggers. Does that make sense? That's the first one. It's not a software issue. It's 100% where the triggers are in relation. And the cool thing is when they break above decidedly, that's the only way that you can have it. And typically, if you're getting that flash, you're not going to have odds favorable momentum anyway. You can trust the background 100%. From this moment right here, when it turns green, what does green mean? Let's do that. If the background is green, I'm only looking for high probability trend trades long, right? And let me change that. I'm only looking, because this is the key part, for the rules to be met. There's nothing to trust or not trust, Big Game. It's either up or down, right? It's either up or down. That's it. Right here in transition, there's no rules met. There's nothing. You don't have odds favorable momentum. Like, the rules aren't met. Just because it's green, I'm not going long. Just because it's red, I'm not going short. I'm not sure what you don't trust. Maybe that's, could we clarify? And I love these conversations. How about this? I don't trust a green background until I have odds favorable momentum and a clear path. And we're talking large chart, right? It's really nothing more than a visual. It's nothing more than a visual of which direction we should be looking for rules to be met. That's all the large chart background does for us. It really is that simple. But we still have to look for the rules to be met. So let's see if we can find a live example. Even though it's green, I don't have rules met for a short. Oh, so like in the middle of a bar, right? So confused. Your background that is red, has been red, literally changes to green, not the next bars. You mean where it was already red? Yeah, so let's see if we can find an example. I don't think you do. So for example, right here, if this bar never became a down bar, Biff, and it went up, these moving averages would work their way back up, and what was a red background for this bar would have been a green background. So the same thing here. Your triggers start to break, and the background goes red, and see how that lines over? That's what gives us the red background. And then when this bar goes up, those triggers start to turn, and on your next bar, they get back inside, and that's what gives the green. So you'll get these little flashes. I hope that I'm on the same page as you. And I may not be. Sometimes I'm not. Yeah, your red area might turn green, and it might turn red. Well, the background of the color. So like right here where it turned red, your fib went from blue to red to blue. And you're like, is it support or resistance? Is it support or resistance? All right. This is where I just think a little and make sure, because sometimes I answer questions that aren't even the questions that you're asking. Where I have a red background, yours would all turn to read, never keeping the red. So this, where it's green right here, this would have been red, and then eventually would have turned to green. I want to see if there's a live version of it. Maybe if it continues down, it would do it. And I apologize if sometimes I don't get the answers because it's difficult through typing to go back and forth without a picture or seeing it live. Whoops, that was the wrong thing. If you're concerned that there's a challenge with your software, let Jason go sort it out real quick. Drop a ticket into tech support and just have him take a look at it. No, you're okay. You're typing just fine. Maybe a small chart. Oh, maybe Pedro. Everything is the most current bar. Maybe this will... Maybe this will help. So this is what's important, is the most current bar. And I know that's a little difficult to read because it's up against this. But you can see that the background is green. But you can see that the triggers are red, right? So because the smaller above the large, my background is green. Because the moving averages are going down, they're red. And this one bar can fluctuate colors 100 times during, but once the bar prints, the colors should stay constant. But you're looking at the most current bar. Well, absolutely. It'll make it look like it never changed. All right. No, that helps for sure. Because there's times, so the bar has to print completely to get the change. And I'm trying to find an example of where you get that little dicey. That's quite a few bars, but you get it. But I've seen it, and it's not super common, where you will literally, it looks like Christmas. And I hope this isn't affecting anybody's vertigo, me scrolling this much. Yeah, so yeah, thank you for that, Pedro. So if it changes after the fact, I would go talk to Jason. That may be a challenge. Once a bar prints, okay. So this may be green, and then it might turn red, and then it might turn back to green. But you would say that like this right here would change colors behind it. Already printed. So on the smaller chart, smalls are beginning to break above, and now it's green, right? Where it once was red. This is great because it's got me thinking about things that I've never thought about before. So let's see what happens if this bar turns red. If it goes down and creates a reversal bar and begins to pull those triggers back below the large triggers. I kind of hope it does. I don't know if it will. But we have the background is decidedly green right now, and it looks like it's 2 bars worth of green. So let's see if it goes down and changes to red. And I guess that the cool thing is, big game, this is the S&P. Okay, so now it goes down, and it changed it to red. See when the smalls came back in? So now I'm red. And if it goes back up from here, it'll change back to green. Let's go to crude. I know, but the mathematics are exactly the same, big game. Show me a picture of your chart. Is mine different? This is crude oil. Does mine look different? And I love this sort of stuff, guys, because I get smarter when this happens. Yours looks exactly the same. Does it look the same over here? Okay. So big game, for sure, if you have doubts or trust issues, go talk to Jason. That way you guys can get on the phone, you can talk, you can go back and forth and not have to type. No matter what color the background is, right? No matter what color the background is, odds favorable momentum, no, that's okay. Odds favorable momentum is always odds favorable momentum. No matter what color, like separation wide angle to the direction of the trend. Let me turn this picture. Hopefully I can pull this off. Give me just 1 second. Let me save this as a JPEG. And hopefully it did what it used to do there. Yikes. I'm not sure where I saved that at. Nope, that didn't do it. Shoot. I'm trying to get rid of all the colors. There we go. Filter. Boom. All right. All right, so maybe this is helpful. Without colors in the background, one way or the other. Are you talking about on the most current bar or historically? So right here, it was red, as if there was never a red area. Like right here, on the most current. But back here. So this red area might have turned green and then red and then green and then red, and fluctuation, right? And that's becoming alarming. Okay, I'm with you. Look at the position of the trigger lines, Biff. And this is why you're getting the fluctuation. Because your trigger lines, it should, once it prints, no, you didn't, Dwight. Once it prints, it should stay constant. But the background color is very dependent on the small trigger line relationship to the large triggers. So if this bar goes up and down, up and down, up and down, and this moving average goes up and down, up and down, up and down, it may change colors 1,000 times before it finally settles on a color in the moment. Does that make sense? It can go back and forth, back and forth, back and forth, back and forth. The color doesn't print. The color, when the bar prints, it still has everything to do with the trigger lines. So when the bar prints, so you may get an up bar, but the small triggers are so far away, it's not going to affect the color. And then if there is a reversal and the market continues up, eventually the smalls will begin to break in and that'll start to do it. But if that happens into a termination condition the way it did here, it may fluctuate. The background color may fluctuate. But it has everything to do with the relationship of the small to the large. Does that make sense? And I still may not have answered your question. I apologize if I haven't. I'm definitely not a tech guy. But I think what I was trying to say with this one is no matter what the color is, this is the only look for a high probability trend trade long. This is the only look for a high probability trend trade short. Right? And if the background color doesn't match the trigger lines, well, then there's no way to ever have that best of the best look because the small triggers have to be below the large triggers for there to be momentum to the short side, right? And when it's in a transition stage, you're never going to get that rule met as it's fluctuating, as it's blinking, as it's doing all those different things because the large triggers are up and the small triggers are down and it's just not creating that look for that odds favorable momentum. And did that help at all? And I apologize if it didn't. I really do. Sometimes I'm so tech inefficient, but I know this about myself, which is why we have Jason, because Jason is absolutely brilliant. He could probably help you a lot. And get on your computer and watch it with you and make sure that you're getting the information that you need to have the confidence that you need. I love the questions, though. I think they're great questions. And I think that you're forcing me to come out of my comfort zone and think about some things. I just want to make sure that you get the answers that you need so that you're comfortable. Okay, right now in crude, we have a red background. The actual red area in yours might change to green. Then the new areas into the areas that are already in past time. So this might turn to green, right? When the smalls come up and start to break through. The actual red area. Are you talking about the fib? Okay, the red background. It might change to green after the fact. So, not the most current bar, but this bar may turn to green. So, not the most current bar. We're not talking about the most current bar. We're talking about this bar behind it. The background may turn green. Can you take a picture of your chart and draw an arrow? Just super simple. Just take a picture of your chart real quick and go mark this area right here or this area right. Maybe that'll help me a little bit because right now I'm really having trouble visualizing what it is that's happening on your chart. Hey, C-Dub, nice to see you. And Biff, while you take that picture, I'm going to go to the next chart and we're going to talk about what Dwight did. And Dwight had odds favorable momentum. And Dwight, you had a clear path and you had the perfect entry. And that was it. Dwight, perfect trade. Lot of risk. You are so far outside of that window. 4 to 5 ticks is appropriate. If it doesn't go from this mid-band, Dwight, jump ship. Wait for the next good one. That's a great look. That's a great look. It just didn't work out. You could have cut your loss in half by being a couple 4 ticks above that highest point of support where the market shouldn't go outside of those large triggers, outside of those synthetic triggers. It's an outstanding look, though, Dwight. That is everything that you look for a short trade. It just didn't work. And then Cav, everything says down. You are trading into a termination condition, but you make the choice with no divergence to ride the momentum for the retest. Nicely done, Cap. This is where momentum creates advantages, guys. It certainly can. And with no divergence on that smaller chart, all you did, Cav, is you rode that wave to the retest. Nicely done. And then Biff, I'm certainly not brushing you off here. I'm not sure that I can help you. Here we go. There's a picture. Let's take a look. Okay. I've never heard of that happening. Will you take it to Jason? And maybe there is a technical issue. I can understand the most current bar fluctuating. I don't know why that would change. If you go to tech support, so what you can do is, whoops, wrong picture. Let me go back. I dropped a link to it. If you click on this link, it'll ask you to put in a ticket, and what he'll do is he'll give you a call. And if need be, he'll get on your computer and make sure that everything's running the way it needs to be, and he'll get you squared away 100%. I'm sorry I wasn't more help. I gave it my best effort there. But I don't have any idea why these back here would change. But I guess what I can ask, Biff, is does it matter what color the background is here to be successful with what's happening in the moment? But if it creates a little uncertainty or you're not good with it, then certainly get your answers. But the color of the background back here has absolutely no bearing on whether or not your rules are met up here, would be the only thing that I might say about that. Joel, odds favorable, clear path, perfect entry, didn't work. Exact same trade as Cap or as Dwight, I believe. Picture perfect, man. You can't go wrong with that. It just didn't work. Sometimes it doesn't work. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Just a cost of doing business. You just paid rent there, Joel. Let's see, who's next? Dwight, we got another one. Okay, so Biff, absolutely. Your first rule is that the background must be the same color as the direction of the triggers. I love that. But your triggers are all the way up here, right? It would be no different than me being concerned about this red blotch if I were looking for longs. I'm looking at the most current bar on the large chart, yeah. So no matter what, and let's go through, and hopefully this helps. Big game, do we have odds favorable momentum right here? We do. Smalls below the larger wide, they're angled in the direction of the trend. That's picture perfect. That is everything that I teach in regards to odds favorable momentum on the large chart. That's the best of the best look. But that's only a little part of the equation. Absolutely. It's not a clear path, but that is rule number one met 100%. It's beautiful. That's the best look. Hey, Ron, take care. Go spend it, man. So even though there's not a clear path, Biff, the odds favorable look is absolutely the same, no matter what color the background is, honestly. And let's look at NASDAQ real quick. Here, do you see how the smalls are not below the large triggers? That's not odds favorable momentum. And I get that from the very first bar. Doesn't matter what color it is back here. I'm looking at my most current bar. I'm looking for that best look. And then on the S&P, smalls are above the large are wide. They're angled in the direction of the trend. Once again, this is odds favorable momentum. This is my best of the best look. But the challenge is I don't have a clear path. Does that make sense? I think we may have just gotten onto something here. And which one was it? I think it was NASDAQ. Yep. Crude is odds favorable momentum. So watch this. Dun, dun, dun. Let's do something. It's okay. It doesn't matter what market you're looking at. The same is true. Are the smalls below the large? So let's compare this picture while it's still in play. And then let me take a picture of this picture where I have odds favorable momentum to the downside. And let's put them next to each other. Your crude chart next to my lesson chart. See how there's separation between the two? See how they're wide? See how they're angled? It doesn't matter what happened behind it. It doesn't matter what color the background was behind it. We're gauging momentum right in the moment on that most current bar. The most current bar gives me everything that I need to know whether or not I have odds favorable momentum in the moment. So in the moment, my smalls are below the large. My large are angled down. In the moment, my smalls are below the large are angled down. And in the moment, my smalls are still above the large, but my termination conditions are working. Does that make sense? And now my smalls are starting to turn, and my large are flat, and there's a couple divergences right at an area. I think that was the termination condition anyway. So let me put the template on. So even with odds favorable momentum, if my path isn't clear, that's not going to work. Just using crude oil. No triggers broke through support, right? So even with momentum, no short trades. Even with a red background, no short trades. Even coming from a good top, no short trades. Does that make sense, Biff? I think this may be the greatest lesson of the day. If all I'm looking at is the most current bar, that's where I'm going to gauge my momentum. And I really do. I have people that are colorblind, that everything is kind of gray. So they're looking at the triggers. They're looking at the relationship of the smalls and the large, and that's the only thing that they have to go by. And then the large chart happens on the most current bar to let you know whether or not that momentum is in play. And the reason that I talk about colors in the beginning, and this is probably my fault for making it confusing, is that for people that do have the color, if nothing else, it keeps you looking the right direction, right? With a green background, I'm going to be looking for strong triggers up and a clear path up and an entry area up. In a red background, I'm doing the all same going down. But none of my rules are really dependent on the color or the background. This just kind of keeps me focused on looking for rules in the right direction. I hope that helps a little bit. So it's still red, and the smalls are still below the large, but I don't have a clear path. And with all the momentum go down. So all right, so right now on the 13-2, the smalls are below the large, right? That's only one rule. That's only the first. Well, it's because they're totally different charts. Why is so? Oh, yes. Yes. It's a totally different story on the 5-1 because they're two totally different time frames. Man, thank you. See how the large chart has odds favorable momentum, right? And the large chart is screaming to the downside. So I drew a box around one bar on the large chart, and it's all of these bars on the smaller, faster chart. So they're two totally different time frames, which means if I take this box and I just go, it's kind of hard to get it here. So let's do it where the change happened. Let's go on this fully formed bar because it's easier. So from the bottom of the bar to the top of the bar, this is all of the action that happens inside of that one bar, Biff. So all this is one big green bar, right? On your smaller, faster chart, this pivot is the bottom of the bar. This pivot is the top of the bar. And all of this nonsense happens until it creates a new bar. So you're going to get a very different story on the 5-1 sometimes. And look at how the 5-1 has a higher divergence. It has a shift or a trend change. It doesn't have any rules met for a short trade. And it's already gone into a long trend. What's it doing? It's showing the change that you can't see on that slower chart because it's a smaller, faster chart. Does that make sense? So they're very independent of each other. The same reason that these 1-to-1s show up on a large chart because they're part of the large chart swings. You don't see them on the smaller chart. They're two totally different time frames, two totally different bar structures. And that's how we use that refinement process for entry, is because what happens in just one here, we can break it down to smaller risk, to more specific areas when the rules are met. And that's why I always say that the large chart leads the way. Let the large chart define your areas, and let the large chart define your momentum, and let your large chart be that broad stroke of a brush. And then we'll go to the small chart only when it's time for entries, only when these rules are met, because we can take that one bar and really break it down into quite a few. We can break it down into 15 to 30 bars. And then the correlation between the two, of course, shows up in the tail. When this chart says up, when this chart is clear, look how the small chart gave you tons of red bars. And the small trigger is turned against it, right? It's that refinement process, but the large chart never blinks during this refinement process. The advantages still stay in place for the whole time, even though the small chart gets a little scary on the pushback down. And what we're seeing right now is we're seeing a downtrend. We're seeing smalls below the large, but I have triggers above support, which means I can't go short, and I have triggers below resistance, which means that I can't go long, which means that I'm very much in a holding pattern. I'm waiting for that absolute best of the best look. I'm trying to decide if they want to push through resistance or if they want to break through support and go back down. I can say to myself, well, they're leaning down because my small are below the large, but I still don't have a clear path, making me feel good about trading into that area. I sure hope. Does that help a little bit, the correlation between the two? I hope it does. And I'm very appreciative of the questions and the observations, because I really think these are the things that people don't vocalize that really need to be talked about. Not always. And that goes back to that refinement, right? Sometimes when this chart says go, this chart may not look 100% perfect. This chart may have small triggers against it. This chart may have small triggers that have begun to work inside of the large triggers, but it doesn't negate the advantages on the large chart. So when I'm looking for trades, and I love this example because this is very much a new user picture. And it goes back to why we trust two charts. This is the best momentum that I could ever hope for. This is the strongest trigger lines that I could ever want. And I love everything about it. And you'll notice that it didn't reach the next area, which means that my path is clear. So the large chart that is defining my direction, which direction I should be looking, that's all the green does. It says, hey, Mark, look for longs. And then the next one is making sure that my trigger lines are strong. And then the next one is making sure that there's not a termination condition. And then once this happens, the very top of this bar, this is the beginning of the pullback on the smaller, faster chart. So inside of this bar, price is coming all the way back to support. Price is coming all the way back to support. Here it looks like a retracement. Over here, it just looks like a bar that can't figure out what the hell it wants to do. And then you go into the whole large chart leads the way as well. From the top of this bar, I've only got 8 ticks of potential to the next trouble spot. But from the entry point on the pullback to support, I've got math skills somewhere around 30, give or take. Right? So it's not that short run, it's the big run because of the refinement chart. Other things that are going to happen on a small chart. You may get the small, tiny momentum indicators against you, because this is what gives it the giddy up to get back to your best entry. But it's always the large chart that says go. It's always the large chart that predicates everything that we do, that gives us the advantages, that makes us look for that refinement process on the smaller, faster chart. Good stuff, I hope. It's fun when I talk through this stuff for me, because it means that I'm going to find a better way to teach it one day. So I'm very appreciative of you guys that keep me on my toes here. And then Dwight, I believe you were next. No triggers make it through resistance, and it didn't work. And I love this. I love that you annotated like this. I was hoping the triggers would push through rather than actually letting them. And sure enough, that one just didn't work out, Dwight. Termination conditions for the win, right? Even with the momentum, and just going back to what we're talking about, even with the momentum, the fibs won. And then David, your short was from here. That was your best short. And you kind of took the second shot at it that was still a rules-based trade. But again, David, are you with me in here? You traded into a fib. Rule number 2-1. That's it. Even with all that momentum, you had 1, 2, 3 areas not broken. You weren't coming from a good bottom. You had divergence against it. And even though the entry looks 100% perfect, rule number 2 gotcha. And then David, are you still in here? I'm looking for the horse picture. He may not be. Guys, that was the best entry, right? A lot of you guys took that one. And then he still took it at resistance inside of favorable large triggers on the second push. And guys, the only thing that you need to think about here is where is it likely to continue? And if this is where it's likely to continue, it shouldn't go up here. You could have had 6 or 7 ticks of risk instead of hoping with $120 worth of risk. It's okay to take losers, but if there's an opportunity to minimize them, take advantage of it, guys. You know where the market should continue. And then CAV. Everything says down. The market is screaming. And then once again, no divergence at resistance inside. And CAV, you're putting on an actual clinic of one of the easiest ways to trade into a term. So Dwight, I want you to take notes off of CAV here. Termination that creates a full reversal, the best looking momentum ever, and no divergence. If he's going to take a shot, no divergence is such a key part of that entry. Cav, really nice job taking advantage of momentum and not forfeiting any of it anywhere. Beauty. And then Sydney, termination, full reversal, odds favorable. You get in when the area clears, you get out before things give up. Sydney, great job, dude. Tons of momentum and go, go, go. And you did it off the bottom as well. What a great job. Nice job, Sydney. You are consistent with your plan. Absolutely. Then Tony, we looked at this one. Not the best momentum, but a clear path. And off it goes to the races. Trading with directions, trading with momentum. And then once again, trading into a Fibonacci area. Hoping the momentum carries you, and it did. Cav, you're using momentum to the utmost of its ability today. And then GWC, 50-50 trade. You have a couple divergences. But everything says down, and you go down, and you're able to make it down to the fib. Nicely done, GWC. Momentum, guys, momentum. Joel, perfect. Odds favorable, clear path, 2 divergences, pull back to support, go, go, go. Nicely done. You guys are getting good at this. Dwight taking the momentum style. Momentum was up, direction was up, trend was up. Smalls are outside of the large. Everything said go, hop in, hop out. Ron would be proud. That is 100% taking advantage of a clear path. Everything says down. The area hasn't quite broken, right? Who is this? Let me see who this was. This is Tony. Everything. Look at the amount of momentum, guys. I want you to think of momentum. This is a freight train. This is a Mack truck railing down the highway, and it's fully loaded, right? That's what this momentum means. How long is it going to take to put on the brakes? Tony did a great job. Tony says with this much momentum on every chart that I own coming from a termination condition, yeah, I'm going to risk the retest. I know it's a termination condition, but I've got 70 things for. I've got the smallest window of opportunity I could ever hope for. And it's going to be hard to pump the brakes on this one. And Tony, that was a great job. Once again, taking advantage of momentum. Guys, we're seeing a lot of pictures today of people trading into trouble. I'm not advocating trading into trouble, especially if you're brand new and you don't know when it's okay and when it's not. Because here's the exact same look, odds favorable, into trouble, and guys, trouble wins this time. So Tony, let's see if we can find differences. Crazy strong, not the furthest fib. Smalls are still outside. Better look. There's one, at least your second divergence in the same price range. All of your triggers are inside. You've got so many, I'm not sure what's what. Notice that they're split too. Notice that the synthetics and the large are starting to break apart, I think. It's kind of an eye teaser here. Even your range chart. Yeah, oh, there it is. Yep. Even your range chart had started to slow down there a little bit. And your biggest chart, so you had term. Yeah. Sorry, I missed and you're absolutely right. Should have waited for it to clear. It would have been a lot easier. And I think that one of the great lessons here, Tony, and this is something that I don't talk about a lot in the classroom, because I really do. I try to keep you guys from trading into areas if you're brand new, because it takes a while. You'll learn to gauge when it's okay and when you shouldn't. The difference between trading into this fib and this fib. With this much momentum, price loves to catch the last fib, guys. The people that trade the market, the people that move the market, the people that establish all the momentum and everything, they know where 16,835 is, and they know where the next level is, guys. And the people that create this much momentum typically want the next level. Does that make sense, Tony? They typically want the furthest fib. They want that higher time frame fib. So if you get a little bounce on the one before it's there, and the momentum is that strong, most of the time, the people that created all this momentum, they're going to go to their target. But once they get there, that edge fib, that furthest fib, that's where stuff goes wrong. That's where you can avoid that last one. Nice job, Tony. Thank you for the lesson with the pictures. That has something to do with feeling invincible on the first one, too, for a lot of people. Man, I just got paid. I'm a rock star. I'm going to do it again. All right, Joel, are you with me in here, brother? And this kind of goes back to what we were talking about earlier. Joel, what does the clear path here have anything to do with the termination condition here? You're showing me a short directly into Fibonacci support, right? Annotating what happened an hour ago doesn't do anything to support what's happening in the moment. So what did you trade into, Joel? Once again, that's it. With all the momentum, it gave you a retest, but directly into rule number 2. Guys, I was the most active trading in determination conditions as a brand new user. I traded in determination conditions every time I took a trade, it felt like. And I didn't realize it until my brother started pointing it out when I finally participated in the room and I started showing my losers. But let me show you what I started doing when, believe me, you're not even close. Let me show you what I started doing. And maybe this will help you guys. If my large chart looked like this, and I'm thinking, man, look at that momentum. Everything says up. I can't wait to take a trade. I got in the habit of snapping a picture right then and walking through the recipe for a termination condition. Has price reached an area? Have triggers not broken? And guys, I had to do this. I had to either put term or no term. And this was, guys, this was my saving grace. This is how I broke the habit. Is I stopped being so, I'm going to go long, I'm going to go long, I'm going to go long. I had to stop myself in the moment, say, am I trading into a termination condition? Because when I went to my spreadsheet, right, when I finally started filling out my spreadsheet and I started looking at these, it said term. I discovered my pattern. And just discovering it isn't always enough to break the habit, guys. This is what it took for me. And I'll tell you that there's a couple other people in this room that I've shared this conversation with, and they've done the exact same thing. They've stopped following their gut. Because what happens is right here, you start thinking long. And right here, you start thinking you missed a long. And right here, you're hoping for a pullback. And then you finally get to the fib, and you are so married to the idea of a long trade that you forget to read your indicators, that you forget to go, oh, shit, that's a termination condition. Am I the only person that's ever done this? I hope not, because that would be embarrassing, wouldn't it? So right here, if I'm thinking, oh, it's coming off of support, I think it's going up, I have to pause and I have to go, okay, hold on. Price reaches resistance, trigger lines are below. I can't go long. I have odds favorable momentum, price reach support, but none of the triggers seem to break. But I really want to short from a good top, but damn it, my rules aren't met. And guys, I'm telling you, this picture broke habits. This picture, this little talking it through before I pulled the trigger, and I had to force myself to do it. I had to force myself to do it. And absolutely, Pedro, no. Hold on. Sorry. I only read half your question. I apologize. Is the pink loss of momentum a termination condition? Let's go find one that's on its own. Pedro, every trigger is above support or resistance. It's behaving as support. This pink line that comes off of that pivot is nothing more than a loss of momentum. Does that make sense? Price going up and coming down created this loss of momentum. That's it. The recipe is true when price comes back to that line. And when it reaches the line and all the triggers remain below, now it's a termination condition. And it wouldn't matter if that pink line were a red fib. It wouldn't matter if that pink line were yellow 1-to-1s, right? So it's a termination condition when price reaches the pink line and the triggers stay below. Does that help? Just a loss of momentum. Now it's a termination condition. And then where do those pink lines help us a little bit? When you get a pink line from an area, Tony, take care, brother, and all the triggers stay below, now it's a termination condition that is also coupled with a loss of momentum, just adding a little fuel to the fire. Just a loss of momentum, right? I'm not what a pin turn back is. A pivot? It's just a pivot. The market just went up and down. That's all. I don't know what a pin pivot is. Is that different than a regular pivot? This is where I need help. So check it out. Market went up. Market went down. Seller stole momentum. That's all it is. Market goes up. It reaches that key area. Triggers remain below. Now it's a termination condition. You thought it was my term. I don't think so. Just a pivot. I'm not sure what the pin part would be. I apologize. Maybe my speech impediment. That's a term. That's a loss of momentum. Does that make sense? And then that's a termination. That's just a pivot from up to down, right back into a termination. Pretty cool. Guys, this has been a great class. This is one of those recordings I think should be watched a couple times. And you notice how we're still stuck, right? The triggers don't agree. I'm caught in between areas. And guys, we've been stuck there for the last hour. Not one trade to be had in the last hour. All right, let's see where we're at. Great discussions today, guys. Thank you so much. Great discussions today. Great learning opportunities. Took the pullback to the mid-band. Large trigger mid-band was at 56 ticks, expecting the price to get to the next fib. Didn't happen. Perfect example of greed and stupidity. I don't think so, man. Um, I'll never say you guys are stupid. You had a termination that created a full reversal, but it's just a 50-50, right, Cav? Smalls are through, large are not. This fib never broke. It never broke. And then one divergence, you're like, I'll give it a go. Two divergences on a 50-50, man, that's my jump ship. I'm not losing on that one. That's just management. You're right. The greed comes into play sometimes. Hope will make you stay in trades so much longer than you need to. But that's that clear path rule again. Without a clear path, there's no reason to hope for bigger moves, right? But once that path clears up, once you get to the other side of things and things start going only one divergence, it becomes pretty easy. Termination, full reversal, odds favorable, 50-50, just one divergence with strong triggers. Beautiful entry. And the small chart never blinks. The small chart never says, hey, Cav, maybe that area is not going to break. I threw you a second divergence, right? Like it did here. Hey, Cav, let's cut ties. Let's not take that next one. In here, it never gave you that management opportunity. Beautiful. Great trade. I got to tell you guys, it's fun for me to watch you guys get better every day. It really is. And then Cav, weak triggers. Oh, you took the momentum on the way up. You let it clear the area with odds favorable. You hop in. And I don't know how you picked your exit, but that was about as smart as it could be. That's an awesome exit. I have no idea how you picked that number, but dude, you look like you knew what was going to happen. And then Tony took the exact same trade, gets in a little bit later. And beautiful trade. I wish he was here to see that. That's where your target was. Predetermined. Nicely done, Cav. And then that's quite the hold, isn't it? 50-50, divergence, way outside. Oh, man. And you held on. That one's a little scary, I'm not going to lie. That's a 50-50 that failed. That's everything. Oh my gosh. These are the ones that are going to drain accounts. And I'm not trying to knock what you do, and I know. But man, these are the ones that are going to drain accounts. These are the ones that if it goes against you and it stops you out way up here, Apex is going to punish you 100%. They're going to punish you. And you're going to be down $1,200 in your account, and they're going to blow you out because you reach thresholds. And then clear path and everything agrees, and you just make money easily all the way down. Right on. But remember, guys, if I go to the batting cage and I bat right-handed every time in the batting cage, and I bat right-handed, and I practice my swing and my tempo and my timing, and I practice everything right-handed, and then I get into the game and I say to myself, hey, I'm going to hit left-handed. Guys, I haven't created muscle memory for left hand, right? If you go to, go to the driving range, and your swing absolutely sucks, but you get lucky, your swing's going to suck out on the course. So if you practice aggressive, if you practice breaking your rules, and even more so if you get successful breaking your rules on simulator, you're going to carry that over into your live trading more often than not, because your brain says, well, shit, we did it on simulator. Let's do it live. I sure hope it works. And for whatever reason, that's when the money runs out. Geo, long time no see. Everything is going up. They're both green, but the path isn't clear. And man, you sit through multiple divergences, wrong side of everything. You're putting an awful lot of stock in that holding. And Geo, and guys, remember, you can always do whatever you want to do. I don't judge you. But being in here and having every reason to exit up here, but holding and hoping and leaving this much risk, at this point with weaker triggers, half the time that stop gets hit and you take a huge loser when you could have been paid. And again, totally up to you guys. Not my job to tell you what to do, but I can certainly help you do it better. Didn't reach the termination, and that one worked for you. Didn't clear the termination, and that one you went short. You went short against triggers, against determination. You went short against direction and got lucky. And this would be one of those things, guys. You want to create bad habits? That's a good one. Fighting trend and triggers. Hoping that this one stupid little pink line stops the market. And then when everything agrees in the same direction, it becomes pretty easy. You're 50-50 once again. One divergence gives you an opportunity. Two divergences, you're just holding, and you decide to get out. I like it, guys. What are your patterns? That's it. We made it through all the pictures. Good job. All right, Dwight, I'm not beating you up. Maybe I'm going to beat you up just a little bit out of love. Everything says down 50-50 and you're able to capitalize and make some money, right? Everything says down 50-50. You get it on the first shot. You ignore two divergences on a 50-50. Hey, Cav, thanks for being here, man. It goes up beyond where your stop should have been. So you start to hope and hold, and then you exit the trade. That's cool, right? Whatever. I don't mind. But here, what direction is the market moving at this point, Dwight? And it's coming from the perfect termination condition. It's going up, isn't it? And it's going up with odds favorable momentum. And the area has the potential to break because of the termination condition. And you just said, F it, I'm going to go short. And you got lucky. You got in and you made money on that one. Dwight, did you notice? Did I miss the picture where you annotated this chart and placed it in the room? I don't remember clicking on it. My point is you didn't show me this one, right? Because you know it's freaking asinine. You know that it's aggressive. You know that it's got such a small chance of success, right? I don't want to show that to Mark. Mark's going to tell me like, dude, what do you expect to accomplish fighting triggers and direction? He's probably going to show me that stupid book that his brother wrote, How to Commit Financial Suicide. Why do I do that? Guys, your silly trades have nothing to do with my life. Nothing at all beyond a teaching aspect. But when you show me, hey, Mark, look where I made money. Isn't that kick-ass? Aren't you proud of me? And from, where'd you get in? 73 and a quarter to 70 and a quarter. That's 3 points, $150. When you show me a $150 winner, I see 1, 2, 3 trades on your chart, and you're only up 137. And this was a winner too? Why on earth would you hide your losers from me? Because then we at least get to have the conversation. This is what you did wrong. This is what you fought. This what wasn't helping you. And it's normal, Dwight. And I'm not trying to make you feel bad. You're doing what everybody does. You're doing exactly what I did when I started. Guys, you're winners. I'm proud of you for the winners. I'm always proud of you for the winners. But when you have momentum and it's a 50-50 and you're able to capitalize, it's easy, right? These are the ones that you can get into and they become easy to manage. These are the ones that are going to drain your account, because if you start trading against everything because you hope, you want, you wish, it's rarely long-term success. It rarely puts you in a position to be successful long-term. It's what we call a short-term victory. And short-term victories are the absolute path to problematic long-term trading. So to minimize your learning curve, great segue, Dwight, thank you. Post in the class, guys, every trade, win, lose, or draw. If you're hiding winners, you know you broke the rules, right? If you're hiding losers, you know you broke the rules. It's okay. I break the rules all the time. Total loss of 130. I know you posted those, and we had good talks about them. But I'm looking at 6 trades, Dwight, and you showed me 3 of them. How many lessons are you forfeiting? I don't give a shit. Pardon my French. It doesn't matter to me if you post them or not. But if you really want to get better, how many conversations are you forfeiting? How many opportunities for feedback are you forfeiting? How many, maybe a little snippet from the guy that's been reading indicators for 3.5 years? How much better could I be if I took feedback on every trade instead of just the ones that I feel like I want feedback on? And that's not just for Dwight, guys. That's for everybody. Because if you win and the rules are wrong, it's a short-term victory, but it sets you up for long-term failure. And that's one of the biggest challenges for new users. Hey, check it out. I made $1,000 on Simulator, but when I went live, I lost $1,000 instantly. That's what I did, because I had no idea what I was doing. I had no idea how aggressive I was being. I had zero accountability in my trading to the people that were coaching me. Get the feedback on everything, guys. If you want, if you don't want, that's cool too. It's totally up to you. Crude oil still hasn't broken. 50-50 on a divergence low. 1, 2, 3 divergences. It said don't take it. If you took it, at least you got out quick, I hope. On the NASDAQ. 50-50 from a good top. First divergence. Dwight, that was your entry. Beautiful from the good top. And divergence said don't do it. Don't hang. Don't wait. Don't hope. And then D-Rock, not the best trading day. You traded against your rules, but you didn't notice till after the trade. Dude, that counts. That happens. That's one of the reasons that annotation and going back and studying is so important, guys. I have taken so many brilliant trades. Like, seriously, children sang songs about me. They were such good trades. And then when I went back and looked at the picture when the adrenaline wore off, I was like, oh my goodness, what on earth was I thinking? D-Rock, I love this one. You have odds favorable. You have a clear path, and you have the perfect entry. What does your annotation say? Magenta 1-to-1, slight negative. Has nothing to do with any rules I teach on the S&P. That one, though, I like that one. You want to talk about something that you can recognize that becomes helpful, D-Rock? The pink 1-to-1s don't scare me on the S&P. Not at all. They're small swings. But that one right there, it's not a termination, but it's at least a keep my eyes open because it may push a little bit further. And that's one of the ones that my brother and I talk about a lot. And it took me a while to recognize them because I never looked for this on a small chart. But for me, D-Rock, and maybe for you, is that if you get that, it's a great time to wait for confirmation on your 8 range. Does that make sense? And it's just a little piece, guys. And that is, Pedro, which one? Large chart, small chart? The small chart's a 1-to-1. And then the small chart is also divergence from a 1-to-1. Right here. Let me make sure I'm in the right spot. Right chart, blue dots. Oh no, that's yellow 1-to-1s, but it also had divergence. That's why it kind of makes it look like blue dots. So you had a loss of momentum at a 1-to-1 on the small chart. Guys, it's not a termination condition, but it becomes a heads up. No. To look for a long? Oh, to use a reversal bar, a market flow signal to get you short? Yeah, that's a great time to wait for confirmation. Or even if you're not using a market flow chart, get a reversal bar or something off the area. And that's just a little more advanced, a little next level, a little pattern that you're going to recognize as you grow with the software. It's not a termination condition, but if nothing else, it gives you the opportunity, the little heads up. Termination, weak triggers up to the termination. 50-50 with divergence, and now we're back into the termination. Guys, the S&P is kind of being a jerk face, isn't it? This is the fight that you don't ever have to get caught up in. It means that you don't get to take trades, but guys, it doesn't cost anything to remain flat. It doesn't cost anything to not trade. CL as well. Termination to termination to termination to termination to termination. It's leaning up, right? Does that mean it's guaranteed to go up? I've got a divergence high with no triggers through it. I've got small triggers, not through 2 layers of resistance. Who's going to hope? Who's going to hope it goes up and completely ignore the large chart and take an entry? And who's going to say, it's cool, it's just not my money, let them fight? Because eventually they break, don't they? Eventually, those dumb little areas, eventually they break. And when they do, very often, they give you opportunities. Guys, today's been a really good day. A lot of great conversations today. I hope you're walking away with a little more insight. We still have a minute or two. Is there anything that you guys want to talk about? Absolutely, D-Rock. Guys, I love this. This is what I do every day. And I want you to notice that your classroom got more interactive, right? It started covering different topics when you guys presented different topics to talk about, when you guys talked about the things that you need help with. I hope you saw that I'm 100% willing to make sure that you have clarity before we call it. And sometimes I'm not going to be able to do it on the first run. Sometimes I'm going to try to answer your question and I'm going to fail miserably. Force me to say it over and over. Send me a private message. Say, hey, Mark, I appreciate the effort, but I didn't really get the answer. Here's a couple pictures, right? I'm more than happy to, especially when there's confusion, to help clear it up. But I think that the biggest thing today was posting in the room, asking your questions, telling me what you need help with, right? That's how you get to where you want to be. Everybody's got a coach, guys. And I'm going to show my age. Michael Jordan had a coach. Tiger Woods had a coach. Wayne Gretzky had a coach. Mary Lou Retton had a coach. Who else? Serena Williams had a coach. LeBron James uses a coach. Nolan Ryan had a coach. Everybody has a coach, guys. There's a reason. Because when you're in the moment, sometimes it's hard to see what's going on. But if you have someone sitting on the sidelines looking at what you're doing, I can offer feedback, and I don't have an emotional attachment. Mary Lou Retton in the 80s won the gold in the Olympics, and she did it with a broken ankle off of the vault. Mary Lou Retton was a bad little lady. She literally had a 10.0. No, it would have been more like 85. She broke her ankle and still competed. Yeah, I remember that one. And won. And some days you'll have days with no trades that fit the rules. D-Rock, it's rare. It's rare that it happens, but it will happen every now and then. I like to be busy. And you know what a true story is? I'm just going to go throw all my dirty laundry out there. is the faster the market's moving, the more antsy I get. I like it when it's slow and calculated. I like it when I have time to think about everything that I'm doing. Yeah, that was my biggest problem, Dwight. Um, and you know what's cool? Is that eventually you're going to get repetitions, you're going to recognize patterns where you feel comfortable trading into a fib, where you feel comfortable. Maybe you get a termination condition and look at the difference. Actually, you know what? Let's go to the user guide. I want to show you guys a picture, and I think you'll dig this just from the termination conditions. This is one of the most valuable lessons that I got from my brother. And guys, I'm not telling you to trade into fibs. When the market is coming up and hits resistance the first time, the triggers are strong. Joel, price reaches a line. If none of the triggers break, it's a term. That's the recipe right there. You know the recipe. You've been showing it to me for a year. Price reaches, no triggers, no trade. Guys, when your triggers are strong going into a termination condition, a lot of times you're going to get that push, right? And it hits the fib, and you're saying to yourself, don't do it. If there's a lot of strength on the hit above, the hit below is likely to bounce, guys. Again, freight train. But look at the difference. When price reaches those areas, do you guys see the difference in the trigger lines? So for you guys that are thinking, is it likely to break? Is it likely to hold? This is a good recipe. Really strong into the area. Don't expect this to break just because it's a termination. Super weak into the area. Retest. And then you come down here and you get to this fib and you're already in a trade and you're thinking to yourself, is this fib likely to break or hold? Well, the momentum says it has the potential to break. The super weak triggers at the termination says that it's likely to break. So if you were in this trade, wrong one. If you were in this trade, this is where you may hold for a little bigger move. If you weren't in this trade and a 50-50 printed, this is where you feel a little more inclined to take that 50-50. Because you are coming from a termination, but it's a termination with weak triggers. So on that same note, super strong into the fib, look at the bounce, back into the fib with super weak triggers, and look how areas break on the way down. Do you guys see it? Super strong, don't expect this to break. Super weak on the retest, more likely to go down. Guys, these are patterns that repeat themselves. Strong into the fib, don't expect the 50-50 to do great things. Strong into the fib, don't expect this to smash. Comes back, retest support, weaker triggers, more likely to go up. That's your little extra snippet for today, guys. That's your expectations moment for the day. Strong into the fib, retest, strong again, retest, super weak into the mid-band, triggers don't blink. Now it's more likely to go up. Trading at the edges video. Amen, Pedro. That's the one, right? Let's go find that video. For you guys that are trying to go a little next level, this is a good one for you. Oops, let's search on Nexgen. I have two. I'll just give you all of these. That's the Trading the Edges side on Nexgen. Pick a few, have some fun. Bobby, you're going to make me go back to basics, right? Do I consider the pink a termination condition? Man, I try to stay very, very steadfast on what I consider a termination condition. When I do it, I adhere 100%. to this picture. I adhere to divergence highs, divergence lows, yellow one-to-ones, fibs, and support. And the reason I do that, Bobby, is because these yellow one-to-ones are big swings. They're really big swings that create those one-to-ones. The small one-to-ones are just that. They're small. These little pink one-to-ones, see how they show up everywhere? Showed up there, didn't have a thing to do with it. Show up here, don't have a thing to do with it. So when I start looking for these to have some sort of significance, Bobby, is when they happen. If I had pink one-to-ones right on top of the yellow one-to-ones, that might add a little strength to the idea. These pink one-to-ones lined up right with Fibonacci support down here. And you can see that they were right there at Fibonacci support as well. That may add a little strength to it, right? But if they're floating out in the distance, I don't worry about them too much. Sometimes you'll see that's where three divergences happen on a smaller, faster chart. But I'm really focused on those very basic, those very key elements. Fibs, yellow one-to-ones, divergence lines, stuff like that. So much that I don't even really pay attention to them. That's just me, yeah. Guys, I think that's all I have today. Man,